the Fed would be well served to be very cautious in this environment.
They're in almost an impossible position.
The vacuum of data is starting to cause some concerns.
Data or no data, you still have to make policy.
They have to be pretty careful about how much they signal more cuts going forward.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday, adding to all-time highs. Chair Powell's Federal Reserve expected to cut rates for a second time just before more than $11 trillion of market cap reports earnings. And the president touches down in South Korea to meet with China's leader. The week begins right now.
And the table's set in South Korea for these two leaders to meet. President Trump and Xi Jinping, the leaders of the world's two biggest economies. And Jonathan, the president gave us some insight of what's going to be discussed to reporters. He told them on his way to South Korea, we're going to be speaking about Blackwell. Blackwell is one of the most advanced AI chips that the United States has. It comes from NVIDIA. Jensen Huang, who spoke to Ed Ludlow yesterday, talking about the fact that he's also going to go over to Asia to speak to the president. What's so interesting about this, the president calls it the super duper chip, pardon the pun, but he's literally putting the U.S.'s most highly advanced chip on the table, and this would be a huge win for Beijing.
A massive win for NVIDIA as well. The stock is up in a pre-market by 3%. There's a dance to the one side. We'll buy some soybeans. We'll lower some tariffs regarding fentanyl. I'm right there with you. This is the main event. The president has been celebrated by the China hawks in Washington, D.C. for a long, long time, for the best part of the last 10 years. If he moves this in this direction, I think he's taken a big step to contradicting some of the work that he's been building up over the last 10 years.
Right. This is part of the reason why he was elected originally in 2016. It was taking on China, not just rebalance the unfair trade treatment that China has in the global market, but also they have made this a pivotal national security concern. And you have to ask, the president told reporters today, Jensen Huang was in the Oval Office 3 days ago. You have to ask, does he have more influence on the president when it comes to policy that affects national security in the United States than even some of his own advisors?
It's a question we'll ask throughout this morning. If you're just joining us, equities, all-time highs, adding some weight to the rally on the S&P 500. Earnings coming up later. Microsoft, Meta, Alphabet. We're talking about $9 trillion of market cap reporting after the closing bell. Across 5 names, including Amazon and Apple tomorrow, we're talking about almost a quarter of the S&P 500 reporting across just a handful of names.
For the next 48 hours is going to be intense on the earnings space. The so-called Magnificent Seven are projected to post a profit growth for third quarter, Jonathan, of 14%. Nearly double the 8% that is expected for the S&P 500 on a whole. So this is going to be huge.
Coming up on the program, a big hour. Julian Emanuel of Evercore with stocks on a tear. Mary Lovely of the Peterson Institute as the U.S. turns down the temperature with China. And Greg Daco of EY looking ahead to the Fed meeting later on this afternoon. We begin this hour with stocks trading higher as traders await a key stretch of earnings, trade talks and a Fed decision. Julian Emanuel of Evercore writing, it's a week where decades happen. Short term, we see the potential for a hypercharged S&P 500 move above 7K as equally probable to a setback to 65.50. Julian joins us now for more. Julian, good morning.
Good morning.
Julian, sir, help me. When you write something like that, what on earth am I meant to do? What do people do with that?
So you have to focus on the long term. Okay, the long term for us is 77.50 at the end of 2026. But I will say over the last week, I have been getting sort of derisive jokes about that price target not being aggressive enough. And that to us signals maybe there's a little bit of too much exuberance. And then again, you step back and you see all this event risk coming, whether it's earnings, whether it's geopolitics, whether it's the Fed. There's a lot of positivity priced in the here and now.
Let's go through the event risk. So tech earnings later and again tomorrow. The trade conversation in South Korea between the US and China and a Federal Reserve decision later on this afternoon. Out of those three, what's more fragile? What's going to be the source of that volatility potentially for you?
I would say it's going to be earnings, okay? Because step back again and your comments at the beginning, President Trump wants to have this meeting go very well with Xi. I think if anything, He's got the memory of the two of them sort of hand in hand at Mar-a-Lago all those years ago and thinking about that same kind of positivity. And look, there are a number of issues that, real honest to goodness wins can be scored in the here and now, although there's going to be, further negotiation that will certainly be going on. But again, for us, it is the same story that it has been, that was at the trough in April, is that earnings are going to be good. The question is how much in the here and now is priced into stocks.
You wrote the note this morning and published the calm before the Max 7 storm. Let's talk about some of those names. Microsoft, Meta, Alphabet, Apple, Amazon. Different businesses then. I know you can't do single names, but what's the single metric you're focused on? What's the source of concern?
Well, it's basically going to be commentary rather than hard numbers. Commentary about the AI revolution. And frankly, when you see stocks respond the way they did to the news that we had in AI yesterday, the news that we have this morning on AI, our belief is that the positivity is going to continue. And in some of our channel checks, what we're hearing now is what we hope to hear, is that some companies are saying we see CapEx spend visibility now out to early 2027. And that's different. And that's been, if you look at the last year and a half, part of what continues to move things along is that CapEx peak that everyone's been concerned about continues to be moved out in time.
Julian, yesterday we had another story in terms of circular financing, what it feels like when it comes to NVIDIA and Nokia. Are you concerned about this when we get these results?
It is ultimately likely to be something that's concerning, particularly in some of these companies that have had to issue debt to make these deals happen. But by and large, at the moment, when you think about where the CapEx is coming from, it is from companies with huge, huge earning streams. And to us, that enables the story, particularly in an environment where, again, remember, we were worried at some point that the 10-year yield was going to go through 5%. And here we are below 4%, and credit spreads remain near their tights. So at some point that may be a concern, but that's off in the distance for us.
The president's tone on the Blackwell chip, does that set this tone for how potentially some of these other tech firms might be approaching doing business with China?
I think it's going to be much more of a case-by-case basis. And look, think about the tie-ups that the Trump administration has announced, the stakes, the deals. A lot of this is going through the Oval Office, and I think a lot of it is going to be a narrative that's crafted by the administration.
I understand, based on what you've said so far, constructive over the medium to long term on equities. Got that. You think there might be some vulnerabilities in the short term because people are getting so bullish. Let me share with you a really punchy call that was shared on this program yesterday. It came from Osun Kwon of Wells Fargo. We see a reasonable upside to 7,100 on the S&P by year end. Our call is to buy low quality, junk, high beta, AI CapEx beneficiaries, a full risk-on trade. When you think about maybe the source of volatility into year-end, we've discussed that. What do you think is the fragile part of the equity market right now that you'd be pulling back from?
Well, and again, we have to distinguish the short term from actually the medium and the long term. And part of the reason that we're not fully committed to this idea that stocks could pull back is because seasonality is so incredibly positive in general. That may be an offset to the extreme bullish sentiment that we're seeing. Years like 1999, you had a continued rip. But frankly, if the market is going to pull back, it will be because you'll see good earnings announcements and the stocks won't respond positively in the AI theme.
Does this feel like 99 to you?
Not yet. Not yet. And one of the two big differences, number one, the Fed was hiking in the second half of 1999. And number two, when you look at the internals of the market, right, the advanced declines day in and day out, they were moving lower for 2 whole years prior to the bubble top in 2000. They're moving higher with the indexes.
Yesterday was a peculiar session. 398 decliners on the S&P 500. Hardly any of them index was in positive territory on a day when we finished higher. Explain what yesterday was. What's the takeaway for you?
Yesterday was one of those days that give us pause about the excessive bullishness right now. and really concentrated in the AI theme, basically, in the lead up to the news that we hear this morning, which is, further upside.
How will you know when we're in 1999?
We will see. So here's the Evercore ISI take on it, is that in the morning meeting, we have a lot of research. We present fundamental, we present macro. When we start having morning meetings that are all about deals and there's no room to present research, that's part of when we'll know. And it happened before. We've seen it. It happened in the 2021 time. It happened in 2007. It will happen again.
Julian, a clinic. It's good to see you. Thank you, sir. Thank you very much. Julian Emanuel of Evercore ISI. Equity futures this morning, positive by 0.1%. What a 24 hours we've got coming up for you. All-time highs heading into major tech earnings, a Federal Reserve decision and a key trade meeting in South Korea between the US and China. With an update on stories worldwide with your Bloomberg brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. President Donald Trump is in South Korea, where he just reached a trade deal with the country ahead of tomorrow's meeting with Chinese President Xi Jinping. Speaking to reporters aboard Air Force One on his way to Korea, Trump said he expects to lower tariffs on Chinese goods over the fentanyl crisis, and that he will speak with Xi about giving China access to NVIDIA's Blackwell AI chips. Meanwhile, UBS announced third-quarter earnings that beat analyst estimates as investment banking revenue and lower-than forecast legal costs boosted its performance, though shares are down 1.3%. CEO Sergio Aramati defended the company's exposure to the bankrupt First Brands, calling the scrutiny a witch hunt, insisting investors were aware of the risks. And Uber plans to build a fleet of 100,000 autonomous vehicles powered by NVIDIA technology. NVIDIA says the companies expect the expansion to start in 2027. The move could help bring down the cost of offering hailable robo-taxis to consumers. Stellantis will be among the first automakers to deliver those NVIDIA-powered robo-taxis to Uber. That's your Bloomberg Brief. John.
Yahara, thank you. More from Yahara in about 30 minutes' time. I'm next on the program, hoping for a breakthrough.
Probably you know that the President Xi of China is coming tomorrow here. And we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
That conversation up next with Mary Lovely of the Peterson Institute, live from New York City this morning. Good morning. Your day ahead looks like this. 2 p.m. Eastern Time, a Federal Reserve interest rate decision. 30 minutes later, Chairman Powell news conference after the close. Earnings from Meta, Google and Microsoft. On to tomorrow, a conversation between the US and Chinese leaders sitting down in South Korea to discuss trade. The president's priorities have been well articulated over the last weeks. We've been talking about soybeans, rare earths, all kind of things around what happens next. We weren't talking about this. This quote from the president on Air Force One. We'll be speaking about Blackwell. The stock is up on NVIDIA by more than 3%. Where did that come from?
This isn't just any chip. This is what NVIDIA has to offer in terms of their most high advanced processors. And potentially, the president is saying this is going to be discussed. Pardon the pun, literally putting the chip on the table. For Beijing, this would be a massive win. And you have to ask yourself, what for? What did we hear this morning? China's going to buy a few cargoes of soybeans. So the United States is willing to give their most advanced technology in exchange for some agricultural products. That is where this relationship stands right now.
Stock is up by 3.3%. It's given a lift to this equity market, positive by 0.2 on the S&P 500. On the Nasdaq, up by 0.3. Under surveillance this morning, hoping for a breakthrough.
On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan. Our deal with the Republic of Korea will be finalized very soon. Like probably you know that the President Xi of China is coming tomorrow here. And we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
So here's the latest this morning. President Trump planning to lower tariffs on China over the fentanyl crisis as China buys its first U.S. soybeans in months ahead of tomorrow's face-to-face meeting with President Xi. Joining us now from South Korea is Bloomberg's Tyler Kendall. Tyler, is the president willing to go even one step further?
Well, John, at this point, we're going to have to wait and see, but it does appear that the contours of an apparent U.S.-China trade agreement is expanding beyond just a pullback in the recent tensions. President Trump telling reporters on Air Force One he's going to bring up NVIDIA's Blackwell chip. Now, President Trump months ago had suggested that he consider letting the company sell a downgraded version of its processor, but this would be considered to be a big win for the company, which has been trying to regain market access in China since at least 2022. Now, of course, nothing's been finalized, but I have to say, if you're a defense hawk waking up in Washington today, you might be in a tricky position if you've previously advocated against such sales over national security concerns. Now, you also were talking about fentanyl earlier, and that's another key part of this, and it continues the trend because this hasn't been a recent escalation. These tariffs have been in place since the beginning of this Trump administration. This very likely would look like China putting on export curbs when it comes to the so-called precursor chemicals that are used to make fentanyl in exchange for a tariff cut. Of course, as you well know, 20% of the tariff that's currently in place on China is tied over these concerns. And John, our analysts at Bloomberg Economics, of course, have already crunched the numbers. They say that if China sees their fentanyl tariffs cut in half, so to 10%, it would mean China loses 10% of its exports to the U.S. going forward. Compare that to 70% as the status quo stands now.
Tyler Kendall with the latest in South Korea, tracking events for us over the next 24 hours. Tyler, thank you. Let's stick with the US and China. Mary Lovely of the Peterson Institute writing, systemic issues will not be addressed in this round. We're unlikely to see much progress. Mary joins us now for more. Mary, welcome to the programme. Just first question, what do you regard as a systemic issue with regards to the US and China?
Well, we see some of these systemic issues in Trump 1, treatment of U.S. intellectual property. But there's a whole host of issues having to do with what the U.S. perceives as bans or barriers that prevent U.S. exports into the country and contribute to the lopsided trade balance between the two. We have questions from businesses that American businesses operating in China in terms of export bans and other things that prevent them from having their own personnel in place. There's a whole variety of issues that have contributed to this tension, including older issues, which you'll remember from the first trade war, John. Things like industrial subsidies, China's support for firms through their state banking system, other things that make Chinese exports uber competitive in the West.
Mary, the president telling reporters that they're going to be speaking about Blackwell. This is one of the most advanced AI chips the United States has access to. Is the president, if he allows Beijing to buy these chips, is the president rewarding bad behavior?
Well, I guess it depends on how you look at it. I think there is a bigger issue here, which is how do we protect U.S. national security? And as you know, there is some contention within the Trump administration as to how best that can be done. There, of course, continue to be so-called China hawks who want the U.S. to do everything it can to prevent the most advanced technologies from falling into Chinese hands. There are others who believe that, and this has been said by the president, that one of the things we want to do is to get the Chinese addicted to U.S. chips, U.S. tech. So I think that we're seeing some difference in opinion. We always knew it was going to come down to President Trump's decision. President Trump is a deal maker. He would like to see an increase in U.S. commerce, U.S. sales to China. And of course, these chips are a primary way that can be done.
How much influence do you think someone like Jensen Huang has had on the president?
I think the tech community in general has had an outsized influence on the president, not only through this, but in terms of his behavior toward crypto and crypto regulation and other issues. For example, in these trade deals that he's signing with other countries, we're seeing a promise by other countries that they won't levy digital service taxes and other kinds of taxes that might impede U.S. tech rollout to other countries. So in general, I think he's been a very tech-friendly president.
We have the contours of some sort of agreement that they're going to reach tomorrow. What comes next? Where does this leave the relationship for 2026?
Well, it reduces the tensions and potentially restores some market access to China. For example, by rolling back those fentanyl taxes by 10 percentage points, China will get down closer to 45% or even 40% average tariff rate, which means that the pressure on Chinese companies to go out, build their factories in other countries will be lessened. So we're going to see a significant decrease in tensions. Then I think there's a hope on the U.S. side that we can turn to issues which have prevented U.S. exporters from gaining more of the Chinese market. So I think probably or surely Secretary Bessent, Trade Representative Greer have a whole host of issues that they want to discuss with the Chinese, including, as I mentioned before, industrial subsidies, subsidies that come through the Chinese state banking system included.
Do you think China is willing and ready to make those changes?
I think China is willing to make some changes, not all that the U.S. wants. China right now is, of course, struggling a little bit to revive its local demand. It does not want to be as dependent on net exports. Net exports from China grew by 36% in the year to date. That means that a lot of Chinese growth is dependent on the rest of the world accepting their exports. And for many countries, that means accepting that they'll be permanently in a trade deficit position. So China knows that this reliance on net exports is really not sustainable, and they're looking for alternatives to that. So I think some of these changes are within the realm of things that Chinese authorities want to do. But when it comes to putting their development first, relying on growth in their tech industry, the diffusion of AI throughout their manufacturing, and continued, emphasis on industrial development, those are not going to change.
Mary, you know about these issues far better than I, but this is a conversation that you and I could have had 10 years ago. And back then we were talking about Chinese overcapacity, and people said the same thing, that it wasn't sustainable, they needed to change, they understand that. And here we are 10 years later, and they're on course to run a record surplus this year, even without substantial trade with the United States. Mary, in your mind at the moment, in the history that you've been following this, what makes this unsustainable? What would stop them from doing what they've been doing for such a long time?
Well, they are really struggling. Obviously, they need to buy more of the things they make domestically. Yet Chinese domestic demand has really been moribund. People don't have a good outlook for the future. Firms' investment outside of the tech sector has been, lackluster as well. So they really need to revive their own economy if they're going to, continue to have moderate growth, so about 5%, and not sell all those products to the rest of the world. I think not only the U.S. trade barriers, but trade protection that's being imposed by other countries, including in more friendly areas like the Southeast Asia, who are beginning to see a flood of Chinese imports that are hurting their own domestic producers. I think this response does have the attention of the Chinese authorities. The question is just now, how can they revive domestic demand? I'm just back from Shanghai, John, and I think that this was a major topic of discussion. They're talking about new things. Obviously, investment in the real estate sector is out. They have a lot of infrastructure. They don't need more bridges and roads. They're talking about things like social infrastructure, helping local governments to build things that will help people's lives, including restoring old buildings that need refurbishing, things that will help with children and the elderly, the healthcare sector. These are areas where they're starting to look, and we hope we'll see some action by the Chinese authorities to do some kind of fiscal stimulus in this area.
Mary, we hope. Been saying for it for a while, haven't we? Mary Lovely of the Peterson Institute. I think many people share that hope as well. The Treasury Secretary has been so clear about this ever since he sat in this seat at the start of the year. The greatest imbalance in the global economy is Chinese overcapacity. All these flashy headlines around trade that support equity markets, I get it. It's important. Let's move on. But that big issue is not going anywhere. And it's an issue that needs to be tackled.
And it's really difficult to tackle this issue. Although I will say, China did signal they want to try. They pledged to, quote, significantly boost the share of their consumption in their own economy just this week.
Up next on the program, Greg Daco of EY as we count you down to a Federal Reserve decision. Julian Emanuel of Evercore on the program just moments ago, calling it the calm before the Mag 7 storm. Some big earnings after the closing bell. A big Federal Reserve interest rate decision later on this afternoon as well. Equity futures into that look like this. Positive by 0.2% on the S&P, up by a third on the Nasdaq. On the S&P 500, a 4-day winning streak, the longest run in about 3 weeks. Over that period, we've added an almost solid 3% to the benchmark here stateside. That's the equity story in the bond market, 2s, 10s, 30s. Last time the Fed met, that morning, 2s around 350, 10s around 4%. Where are we this morning? 350 on 2s, around 4% on 10s. Yields higher by just a single basis point on your 10-year, 398.90 this morning. That's the story in equities and bonds. Let's get you some single names. Here's Danny with more. Hey, Danny.
John, it's the $5 trillion elephant in the room, and it is the gains that continue for NVIDIA this morning, up 3.5%. You've been speaking about that this morning, that if we do open at this level, we'll open at a $5 trillion market cap. The latest boost comes from the conversations and the expectations that Presidents Trump and Xi will reach an agreement around fentanyl and other trade issues, and also that Blackwell chips are being discussed with China. So again, those shares up 3.5%. A lot of earnings to look forward to, but we've already had some released late yesterday and this morning. Centene, one of them. This is a health insurer provider. What a turn in fortune. Shares are up 11.5% in the pre-market. This is a company that had a historic plunge in July. The concern for them was the high prices for the medical insurance company weighing on them, but they beat on their earnings, so that's assuaging some of those fears. Finally, wrapping things up this morning with Mondelez, a big old decline of 5.4%. They cut their outlook. They see organic growth sales for 2025 at 4%. Previously, it was 5%. The executive saying that it is a cautious consumer, that there are issues with higher prices, specifically cocoa prices, and you're seeing buyers pull back because of that price sensitivity, John.
Danny, thank you. Appreciate it. One more number for you. It comes from Caterpillar. It's a beat on the top and bottom line. Revenue comes in at $17.64 billion. The estimate $16.71. EPS $4.95. The estimate $4.51. The story in the pre-market shaping up as follows. Caterpillar higher by 2.6% so far in early trading. That's the story with some of the earnings. More still to come, of course, with tech after the closing bell. On our radar this morning, we looked at the banks. UBS CEO Sergio Ermotti defending the company's exposure to the bankrupt First Brands Group, calling the scrutiny a witch hunt. Ermotti insisting investors were aware of the risks and won't change procedures moving forward. A second story from NVIDIA. Shares up, soaring on new optimism. President Donald Trump saying he plans to discuss the Blackwell chip with China's Xi Jinping on Thursday, potentially allowing sales of the AI processor in the country. The stock is up by 3.5%. And finally, on the agenda for tomorrow's meeting, President Trump expecting to cut U.S. tariffs on Chinese goods related to the fentanyl crisis. The Wall Street Journal reporting the president is considering cutting the 20% tariff to as low as 10%. Julian Emanuel on the program from Evercore with us just moments ago, and I think he put it very well. Based on what we've heard so far, all indications point to a president who wants this meeting to go well.
He does want it to go well, and he says he thinks that it will be a significant meeting, that they're both going to walk away with something. Remember, when he talks about China, he also talks about this relationship he has with Xi Jinping, and that he doesn't want to hurt China, but he wants it to be fair. Very different in terms of what we are expecting now from this meeting when you introduce the fact that the president says they will talk about Blackwell. Now, we don't know if the United States is really going to open the floodgates and allow NVIDIA to sell these chips into China, especially in July. Remember, Howard Lutnick, his commerce secretary, was out and about talking about we're not going to give them our first best tech, second or third, maybe our fourth best chip. No. This is prime chip for China to get their hands on. So it's taking on a little bit more significance now than it did over the weekend. We heard from Treasury Secretary Scott Bessent and Ambassador Greer.
So two very different approaches to the AI story of the moment, the US versus China. They've been well discussed on this program. In the US, we're throwing tons of money at the situation. In China, a focus on hyper efficiency, necessary because they don't have the goods that the US companies have the access to. So what is the argument to give them this access? What is the argument that comes from NVIDIA, the NVIDIA boss, and other people down in Washington too?
Well, Mary Lovely, I think, really pointed to this friction within the Trump administration. There are still, although they're becoming less of a number. There are still national security China hawks within the administration and in Washington, D.C. But there is a new approach from some members of the Trump administration, especially those that come from the tech sector or influenced by the tech sector, or Jensen Huang himself, who the president said was in the Oval Office just 3 days ago, showing him some of these chips. They want China and the rest of the world to get addicted to U.S. tech. And the only way to do that, they say, is to get them addicted, is to sell them these chips.
Nvidia in the pre-market higher by around 3% through most of this morning. Turning to the Federal Reserve, policymakers widely expected to continue their rate-cutting cycle later on this afternoon. Greg Daco of EY saying, we anticipate that the pace of rate cuts in 26 will be more measured than current market expectations suggest. Greg joins us now for more. Greg, good morning, sir. Let's just start with the meeting right in front of us and the decision later on this afternoon. What are you focused on?
Well, I think I'm focused on three things. One, how Fed policymakers approach this notion that the effect of tariffs on inflation is going to be transitory. That's an open question, but it seems like that is indeed the case given the latest CPI data, where we have a gradual and uneven pass-through of tariffs, but we have some offsetting effects from shelter cost disinflation. The second key question is really how weak the labor market is. And there, the evidence is a little bit more mixed. We have slower payroll growth. We have evidence of a slight rise in initial claims for unemployment, and we have downward pressure on wage growth. But it's not like there is any type of significant collapse in the labor market. And three, it's how restrictive monetary policy is. And there again, the evidence is quite mixed. For some consumers, we have restrictive monetary policy conditions that are limiting the ability of lower end and median income consumers to spend. And for some businesses outside of the AI space, we're not seeing much forward momentum, which again indicates that monetary policy is restrictive. So a very split committee likely over the course of the next few months and into 2026.
And Greg, we're doing this. We conducted this meeting with limited access to a full data set, which makes it even more complicated. Reading the research, Bank of America, Deutsche Bank, Morgan Stanley, all suggesting it's difficult for the chairman to provide guidance beyond the October meeting. Does that limit the scope for a dovish twist in today's meeting this afternoon?
Yeah, I think Fed Chair Powell will want to preserve some optionality because, as you've been saying, the Fed is extremely data dependent. And in the absence of official statistics, it's going to be very difficult to really base anyone's view on the latest numbers. Outside of CPI, which proved to be a little bit lower than expected, we don't really have any strong economic data. So the Fed chair is likely to emphasize again that there is no risk-free path for monetary policy when the two mandates are moving in opposing directions. And as a result, he's going to essentially want to leave the door open to either maintaining the Fed funds rate unchanged by the end of the year, depending on how the data flows, or potentially suggesting that there is going to be some further easing, depending on, again, how soft the labor market is and how transitory the effect of tariffs on inflation is. I think one thing you just raised, which is very important, is the direction of travel of trade relations between the U.S. and China. One of the key potential upsides to the U.S. economy is essentially a lowering of tariffs vis-a-vis major trading partners. If we have more stability, more clarity, reduced policy uncertainty, and lower tariff rates, then that's going to be a net boost for the economy going into 2026, and it will lower inflationary pressures, which could open the door to the Fed easing more easily and having less difficulty in justifying any type of neutralizing of monetary policy.
Greg, tomorrow the tariff rate on China might be 45% if they cut the fentanyl tariff in half, which the president is signaling this is under discussion. Would that ease the concern of the hawks on the FOMC?
I think it certainly eases the fact that we have a potential for inflation to continue to accelerate. If we have the status quo environment where tariffs remain unchanged, our expectation is that the net lift to CPI inflation is going to be between about 0.75 of a percentage point and 1 percentage point. So that's a significant lift in terms of inflation. It's not comparable in any manner to what we experienced back in 2021 when inflation surged towards 9%, but it is still a movement away from the 2% target. If we have an easing of tariffs vis-a-vis China, a major trading partner, and potentially some stabilization or potentially some deals being cut out with South Korea, with Japan, with other trading partners, then that would essentially limit the upside to inflation, which, as we know, has been really gradual and uneven. So there is a potential for lower inflationary pressures, lower downward pressure on employment and labor demand. And as a result, this could essentially favor the Fed proceeding with a more easier neutralization of monetary policy. Because remember, we're not talking about easing monetary policy per se. We're really talking about moving from a restrictive monetary policy stance towards one that's closer to neutral.
To your point, Greg, this can cut both ways. And we're highly dependent on the policy decisions that may develop in the White House. There's a quote of yours that we brought up at the start of the conversation. I actually want to go back to it and deal with one thing in it. We anticipate that the rate cuts, the pace of rate cuts in 2026, will be more measured than current market expectations suggest. The piece of that I want to deal with, Greg, is the number 2026. How do you define the year? Is it from January to May and then May to December? When we get a change in the Fed chair, or is it the whole year? When you talk about 2026, what are you talking about?
I think it's the whole year because we're going to see, John, a change in the leadership over the course of 2026. So we may have a more dovish lean towards the Fed leadership with Governor Waller, Governor Bowman, Governor Myron, and a new potential Fed chair that all lean towards a more dovish monetary policy stance. But at the same time, we'll also get a rotation of regional Fed presidents that may tilt more hawkish. So the split that we're currently seeing within the FOMC, and remember, in September, we had essentially 10 policymakers that were favoring 3 or more rate cuts and 9 policymakers that were favoring 2 or fewer rate cuts. So a great degree of polarization. That polarization is likely to get only worse over the course of 2026. And I think that markets, by just basing themselves on the median dot plot of rate expectations, may be misguided that there might not be as much easing of monetary policy. And remember, there are 2 key questions here. Are we seeing a transitory effect from tariffs? And what is going to be the state of tariffs in 2026? And are we seeing a significant labor market slowdown? Or is this more of a rebalancing, this curious balance that Fed Chair Powell has been talking about, where labor supply has been hit significantly to the downside because of immigration restrictions, and labor demand is only marginally weaker than what we've seen to the labor supply? Those are going to be the key questions for 2026.
Greg, this was great. Appreciate it, sir. Thank you. Greg Daco of EY. Greg's point at the end there is so important. When we get the so-called dot plot in the summary of economic projections, and we talk about it on this program on Fed Decision Day, we always focus on the median. What Greg's talking about here is the focus on the dispersion, focus on the spread, the distance between the hawks and the doves, and just how wide and messy things are getting going into 26.
And how difficult it's going to be for that new Fed chair once Jay Powell does step aside, whether it's Waller, Bowman, Rick Reeder, who depends it's going to be, how difficult it's going to be for that individual to get them on board for potentially where they see this economy going.
Record highs in the stock market, up again this morning by 0.2% on the S&P 500. For an update of news worldwide, with your Bloomberg brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. President Trump defended Israel's new strikes against Hamas, saying he thinks the peace deal he brokered will hold. Speaking aboard Air Force One on his way to South Korea, Trump said the Israelis had the right to hit back after attacks on soldiers in Gaza. Hamas denies any involvement. Meanwhile, Hurricane Melissa made landfall in Cuba after becoming the strongest recorded storm to strike Jamaica. The storm left hundreds of thousands without power in Jamaica and forced hospitals to evacuate. Melissa is forecast to remain a powerful hurricane as it moves toward the Bahamas, with heavy winds and rains expected to pick up across Bermuda late in the week. And President Trump conceded he can't run for president again. Trump said, quote, "It's pretty clear the Constitution doesn't allow him to seek a third term." Trump has frequently floated the idea of another run, including showing off Trump 2028 hats, despite the constitutional limit. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour, in about 30 minutes from now. Up next on the program, confidence in AI.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. It's now generating tokens and now generating intelligence that's worth paying for.
That was Jensen Wang of NVIDIA. Out of everybody we talked to and interviewed, he's the last guy I expect to tell me whether we're in an AI bubble or not.
Exactly. Because why would he? He is, if there is a so-called bubble, he is part of it. He is actually the ringleader of this bubble.
That stock is up by 3.6% this morning. Up next, Pierre Ferragu of New Street Research joins us to break down this move this morning. From New York City, you're watching Bloomberg TV. Later on this afternoon at about 1:30 p.m. Eastern Time, a Federal Reserve decision special coming right up. Full coverage. It looks a little something like this with Bob Michael of JP Morgan, the former Fed Vice Chair Richard Clarida, Kathy Jones of Charles Schwab, Torsten Slock of Apollo, and a whole lot more. TK will make it into the studio, I'm told. So we'll be covering the Federal Reserve decision a little bit later. 1:30 Eastern, coverage begins. 2 p.m. the decision. 30 minutes later, we'll take that news conference with Chairman Powell in full. Into that, equity futures adding some weight to the recent rally. Equity futures this morning higher by 0.2% on the S&P, on the Nasdaq 100 up by 0.3. All-time highs in the equity market and a rally for Nvidia. Under surveillance this morning, confidence in AI.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
So here's the latest this morning. Nvidia extending gains after President Trump said he will discuss the chipmaker's Blackwell AI processors with the Chinese leader. Pierre Ferragu of New Street Research keeping a buy rating on the stock with a price target of $235. Pierre, that quote from the president overnight, and welcome to the program. Let me read it out for you. It's very basic, very simple. It's worth a few $100 billion apparently to this market cap. We'll be speaking about Blackwells. Pierre, how important is that we're opening the door to Nvidia being able to sell the high-end chips into China?
Well, John, think about it in absolute terms. NVIDIA historically had like 20-25% of their revenues coming from China. So we are talking like a $50 billion annual revenue opportunity. So yes, as you say, easily worth a few $100 billion. Now, if you take a step back, the almost like the surprising perspective is that given the scale of the success of NVIDIA, it's actually a relatively small moving part. When you compare that to what Jensen said yesterday in Washington, he said he was expecting like a $500 billion of cumulated revenue for the Blackwell and Rubin product cycles this year and next year. We are talking here numbers that are like 50% above what consensus expectations are today. So it's a very, very nice comments from the president on the duper super chips is actually a small moving part this morning compared to what Jensen said yesterday. Yesterday, Jensen said the market is still accelerating, which is very, very impressive.
He also said that China has made it clear they don't want NVIDIA there right now, even though the president has allowed some licensing for some chips. If China can get their hands on Blackwell, will they then want NVIDIA in their marketplace?
Yes, of course. What you see in the market is that, and you know, we could talk about China this morning, we could talk about Microsoft, about OpenAI, about Amazon. Nobody wants NVIDIA. Everybody is worried about like the market power they have, but nobody can afford not to use NVIDIA if they can, because today being able to use NVIDIA chips gives you a decisive advantage in terms of time to market. You can get stuff going immediately at the highest possible performance. But everybody in the long term is working on alternatives to NVIDIA to keep NVIDIA's market power in check. And so you see OpenAI signing giant deals with AMD. You see everybody developing their own ASICs. And China is no different. They're developing their alternatives. But if tomorrow they can get a few Blackwells, they would take them immediately.
NVIDIA is clearly looking for an opportunity here, Pierre, and an opportunity that the president is offering them. But I just wonder to what extent China's been successful without access to the highest chips, the high-end chips. Pierre, it feels like DeepSeek was a moment that happened, we wrestled with it and just moved on. But from the people we speak to, Pierre, it looks like China's been hyper-focused on efficiency and the US is going in a different direction. Pierre, if you look at the strategies of either the US and China at the moment, who's got the lead? Even before discussing access to the highest-end NVIDIA chips, who's got the lead at the moment?
Well, the lead, it's a great question. The lead is definitely at the frontier. It's being first to market with the most advanced models. And on that front, there is absolutely no question the US is in a very strong leadership position. Then now, if you look at, so that's like the technological lead. So the technological lead is very clearly in the US. Now you have the industrial lead, you have like the efficiency lead. players like DeepSeek are very good at making models more efficient, at distilling models, and so they play a very significant role. But when it comes to getting access to the largest clusters and running the most advanced models, all that is happening in the US for sure.
So clearly we're getting a move in the pre-market off the back of this story. Stock is up by close to 4%. Pierre, I need to talk about the earnings with you as well. So tech stories of today is going to be Microsoft, Meta and Alphabet. Tomorrow, Apple and Amazon. Pierre, looking across those names, any vulnerabilities for you and the team?
I think the street is still digesting what Jensen said yesterday in terms of the 2026 outlook in terms of AI infrastructure spending. So really what we're going to look at is all comments from hyperscalers. Do we see a confirmation of Jensen's forecast in the way they talk about their capex and their spending plans? And then in terms of vulnerabilities, no, very difficult to see that. We're definitely in a bull week where everything seems to be accelerating. And even when you look at Apple, who is not best position player in the AI race, they have a lot of tailwind at the moment. The iPhone cycle is actually playing relatively well for them, which has generated some very positive vibes and should turn into a strong earnings report.
Pierre, I remember waiting for Apple to cross that $1 trillion line in the sand. Can we just reflect on your career, Pierre? $5 trillion market caps. Pierre, how do you sort of internalize that number? Just how big that is?
Yeah, it's if you had asked me at the time, it's unbelievable. And the thing is that it's part of a broader, of course, of a broader phenomenon. And the number of multi-trillion-dollar market caps that we have now in technology, it's mind-blowing of growth and of also concentration of economic value in tech names. It's really mind-blowing. And specifically on Apple, Apple is a very low growth, very legacy type of franchise now in the AI world. It's difficult for them to find the right grip on AI, but it remains a very, very high multiple expensive stock because the market is still valuing the quality of the franchise. So I think anything one on top of the other, yes, you end up at almost $5 trillion of market cap.
Just amazing. Amazing. Pierre, thank you, sir. It's good to see you, as always. Pierre Ferragu there of New Street Research. $5 trillion. The UK market feels almost provincial. That's one single name, $5 trillion. The whole UK market, the FTSE 100, to be very specific here, is 2.5 trillion sterling.
And yet individuals keep coming on the show, like Pierre, almost everyone but one person has a buy rating on this stock, and they expect NVIDIA to continue growing. Yesterday, not just Jensen Huang was asked about an AI bubble, the President of the United States was also asked about, and he said, AI, what problem is that? He's like, it's the internet. Everyone wants their hands on it. No bubble here.
If you're selling the US, what are you buying? Where's the pool of liquidity that can match that? A $5 trillion name at a 2.5 trillion sterling market. The FTSE 100 versus NVIDIA. It's just bonkers when you think about the people that come on this program and say, I'm going to sell the US and I'm going to buy, say, Europe and the UK. Really? How does that work? Coming up on the program, Gargi Chaudhuri of BlackRock, Henrietta Treyz of Veda Partners, Tony Wang of T. Rowe Price, and Blake Gwinn of RBC from New York City. You're watching Bloomberg TV.
The Mag 7 can continue to deliver. That continues to drive a lot of upside.
The large cap stocks appear to be the most resilient.
It's really going to be driven by earnings. We think it ends up being potentially a bubble in earnings down the road.
It's really guidance that matters as you wind up working your way through.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P adding some weight to a record-breaking rally. 4-day winning streak on the S&P, up another 0.2% on the S&P 500. On the Nasdaq, up by 0.3. In the bond market, 2s, 10s and 30s at the front end, almost exactly where we were when the Fed last met. 350 on 2s, 4% on 10s. 398 this morning, yields are higher by a single basis point on a 10-year maturity. The day ahead is absolutely stacked. As we said in the last hour, the week begins right now. The Federal Reserve meeting later on this afternoon. Chairman Powell presser as well. After the market earnings from Meta, Google, Microsoft, and then tomorrow, the president sitting down with China's Xi Jinping. On the table, so rare earths, fentanyl, okay, soybeans, got that, well articulated, super well communicated over the last week. What did we miss? This apparently, President Trump on Air Force One will be speaking about black wells.
The super duper chips is how the president put it. And Julian and Emanuel on the last hour talked about how this is the calm before the Mag 7 storm. Who needs the Mag 7 earnings when the president is adding more juice to this market? Talking about the fact that they're going to be discussing. Doesn't mean it's going to happen, but he's putting on the table the U.S.'s biggest chip that China wants. And that is literally the Blackwell AI processing chip that the president himself said, Jensen Huang came into my office 3 days ago to show me it. Guess where Jensen Huang is going to be traveling to? South Korea. He's going to be meeting the president, potentially the last executive to sit down and speak to the president before he goes and meets Xi Jinping.
Stock market likes it, and the pre-market stock is up by 3%. To the hawks, the China hawks in Washington, D.C., like what they're hearing this morning?
Absolutely not. You know, you remember in 2016, Jonathan, you articulated this very well in the last hour, the fact that the president wanted to take on China. This was something that was critical for his base, and the China hawks loved it. The China hawks are not going to like the idea that some of the highest advanced technology the United States has might be going into the Beijing market. But there's been this huge debate within the Trump administration. Those that are traditional China hawks and those that have been heavily influenced by the tech community that want China and the rest of the world addicted to U.S. tech. And at the moment, it seems like that is the direction of travel that this administration is taking.
Fueling another leg higher in equities more broadly. Equity futures this morning positive after a 4-day winning run and another all-time high at the close in yesterday's session. Coming up this hour, we'll catch up with Gargi Chaudhuri of BlackRock as AI makes more waves on Wall Street. Henrietta Treyz of Veda partners with President Trump predicting a good trade deal with China, and Gwinn of RBC Capital Markets as investors eye today's Fed decision. We begin this hour with stocks hitting fresh records ahead of a Mag 7 earnings test. Gargi Chaudhuri of BlackRock writing investors are looking for proof that cloud growth is re-accelerating and that massive AI capex is converting into real paying workloads. Gargi joins us now for more. Gargi, good morning.
Hi, good morning.
It's good to see you. So out of the three then this week, Fed decision, trade talks, earnings, does earnings take number one spot?
Well, the volatility markets seem to think so. And if you look at what's priced in terms of moves per day, it certainly seems like the earnings are what's going to be a bigger driver. But certainly with the Fed, I think we should pay particular attention to what happens with the balance sheet. I do think that the 25 basis point rate cut is very well advertised and very well priced. But it's really about if they do something with the balance sheet runoff, and if that gets announced today. Obviously, we heard from Chair Powell earlier in the month, which was about in the coming months, but the market is expecting for some sort of announcement today. So that would be important. And then, of course, for the rest of the week, it's earnings, and then finally the New York Marathon.
The New York Marathon for you. Do you want to share it up front? How many marathons have you run?
Many. The number's many.
We're in the 20s now?
We're in the 20s.
OK. And what charity are you supporting?
It's called Shoe for Africa. It's a charity for children in Kenya, and it's building a hospital.
Very cool. So if anyone wants to donate, of course, reach out directly.
Being modest. It's 26. That is insane.
26 is absolutely unreal. We're going to talk about that later. Okay. Let's focus on this market if we can. QT, what are the implications of backing off from QT?
Absolutely. So a couple of things. First, recognizing if that does happen, where do the reinvestments go? I think that's the main thing. Does it get reinvested back into bills only, or is it along all tenors of the curve? And obviously, if it is along all tenors of the curve, that's more demand coming in for treasury markets. And I do think if we look at what the long end, the very long end, 30 years or so have done over the past month, I think there is a little bit of expectation of that coming back into the market. So if we don't get anything at all, maybe at least in the very long end of the curve, we could get a little bit more of that steepening that we began to see earlier this year, and then it sort of stopped for the moment. But at the same time, we've talked about this for a while. This is a really good opportunity in the markets to clip coupon, especially if you're in that belly, maybe that 3 to 10 year part of the market. That still remains. We're still in a path for the Fed to cut now and again in December. So very clearly, that's going to be another boost to equity as well as income markets.
The Fed cutting in December, are they basically accepting that 3% as the new 2%?
I don't know that it's 3% per se. If you think about, especially with this last CPI print, what we saw was that very sharp and clear deceleration in OER. And where we saw the inflation was in much more of the temporary areas, such as tariff-related goods, apparel, etc. If we continue to see that deceleration in OER, in shelter more broadly, I think you can reach a world by the end of 2026 when you're seeing sort of that 2.5% core CPI. And I think that is something that the Fed will accept and be able to, at least the Fed, the future Fed probably will be able to live with in a world where some of the inflation that is coming through is probably more transitory in nature. I think it's all about shelter and it's all about OER, and we've seen some very good numbers on that front.
We also have the trade talks happening. The possible lowering rate of the U.S. tariff level on China. Is that helpful for the Federal Reserve?
I think it has to be. Again, when we talk about what is the transitory, temporary drivers of inflation, some of those, as we have seen in the core goods data over the last 3 months, are very much related to those tariff inputs. So to the extent we now can live in a world where that tariff rate is severely higher than last year, but not as high as we had expected. It's not in the 20s, maybe in the mid-teens, and it's passing through slowly. I think that's another important point. How much is the consumer bearing? And so far, we haven't seen as much as perhaps feared in Q1 and Q2. All of those, I think that rate coming lower, maybe settling in the mid-teens, as well as the transmission mechanism being lower than originally feared, are good for a Fed that wants to keep interest rates more moderate.
So that's the framework for thinking about this market. Let's talk about this market, how to express risk. So yesterday was an odd session. 398 decliners on the S&P 500, only 104 stocks advanced. This was very top-heavy, led by tech. Don't ask me why it doesn't add up to 500 on the S&P 500. Complain to someone else. This came from Deutsche Banker Jim Reed, and he put up these numbers and said there were only 104 advances on the S&P, the fewest in over 2 weeks, and actually the fewest on an up day as far back as my data on advances and decliners goes, back to 1990. What's the takeaway from the last 24 hours?
I think the takeaway, maybe not just for the last 24 hours, I would say the last year, is that earnings growth is driving S&P performance, and you want to be where the earnings growth is. And where is that earnings growth? It is in those hyperscaler names. It is in AI, and frankly, it is broadening out a little bit to broad, large cap. And I think that's where you want to be. Could we get a few negative surprises over the course of the next 3 days? And could that maybe bring a little bit of volatility, some down days in the market? Absolutely. But is there a structural story here, especially around AI monetization? We think so. We've been talking about this from the start of the year with respect to our positive view around AI. And we think as long as we see that demand, as well as the monetization, as well as the user actually being able to benefit from AI, we might see that in ad revenues and such. I think this continues. I think it might broaden out to more of the larger cap names instead of just the 4 or 5 hyperscalers. I think that's something we're looking forward to and telling investors to focus on. But the point about yesterday and a very small percentage of the index being up is not a new story. It is a feature of this market, not a bug. That is where the earnings growth is.
So let's look at the BlackRock menu. You're familiar with it more than I am. Is this just a vanilla S&P 500 market cap weighted index story, express risk that way? Or is there a more optimal way to express risk in this equity market?
It can be, depending on who the investor is. And again, some people just want, you're stepping into the market for the first time and you want something easy, and IVV will do the job for you. What we are telling investors, though, this is the time to focus on things like BAI, which is our actively managed AI ETF, which again gives you some of those very specific earnings story in the AI space. We think you should have that satellite allocation. The other thing that we're talking about is if you're thinking about the broadening out theme with respect to large caps, again, that is something you can do again with a BlackRock large cap value or a BlackRock large cap, it's called BLCR fund, which is sort of the rest of the market with a focus as well on a large cap tech. And then I think for many investors out there right now, especially, you're getting that 6.5%, 7% income. You no longer have to wait till you're 85 years old for fixed income. I own own fixed income. I hope you guys do. Again, focusing on something like Bink, earning that 6% coupon. It's a really great opportunity, especially with the Fed poised to cut more.
Gargi, this was great. Good luck on Sunday.
Thank you.
It's good to have you here ahead of all of that. Gargi Chaudhuri there of BlackRock with a much busier week than you and I. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara with more. Hey, Yahara.
Hi, John. Caterpillar shares are rising 4.5% in the pre-market after the company reported better than expected top and bottom line beats in the third quarter. The heavy equipment maker's energy and transportation business provided a boost amid rising demand for equipment needed to fuel data centers for AI. Meanwhile, China has resumed purchases of U.S. soybeans. The country reportedly bought at least 2 cargoes, its first known purchases of the season. The news comes after China and the U.S. reached a broad framework agreement over the weekend, paving the way for President Trump and China's Xi Jinping to finalize a trade deal when they meet tomorrow. And Tesla is prepared to name a new CEO if Elon Musk steps down over a disagreement about his pay package. The chair of the company's board told Bloomberg Tesla would look internally for a new CEO. The board is set to vote on Musk's $1 trillion pay package next week. That's your Bloomberg brief. John?
Yahara, thank you. Just learning about the marathon diet as we go. It's amazing. How many gels are we consuming over 3 hours? 6. And how many calories are in each gel?
100 to 160, depending on if they're caffeinated or not.
Okay, There we go. Gargi, thank you. I'm learning something all the time.
I'm ordering them right now.
You're ordering some gels? All right. Up next on the program, easing tensions with China.
Probably you know that President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
That conversation up next with Henrietta Treyz of Veda Partners, live from New York City this morning. Good morning. Big day coming up. Lots of earnings after the closing bell. Meta, Google, Microsoft, the Federal Reserve and Chairman Powell later on this afternoon. Look out for that. 2 p.m. decision, 2:30 news conference. The stock in the pre-market we want to focus on, Nvidia, knocking the door for a look at a $5 trillion market cap. The stock is up by 3.7%. The president opening the door to selling high-end chips into China.
Whether or not the door remains open and those Blackwell chips make their way into China, that remains to be seen. But the president setting the table by putting that chip literally on the table, saying we're going to be discussing it, the super duper chip. This was something no one was tracking this summer because his own commerce secretary said there's no way we're going to give them access to our most advanced chips, not our most or second or third, maybe our fourth most advanced. That's what they're going to get access to. That is not the case today.
That move in the pre-market adding to this move at the index level. On the S&P 500, higher by 0.25%. On the Nasdaq, up by 0.4%. Under surveillance this morning, easing tensions with China.
On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan. Our deal with the Republic of Korea will be finalized very soon. Like probably you know that President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
So here's the latest this morning. President Donald Trump looking to trim China's fentanyl-related tariffs as Beijing buys its first U.S. soybeans of the season. The president set to meet face-to-face with Chinese leader Xi Jinping tomorrow. Tyler Kendall joins us now from South Korea. And Tyler, it goes beyond soybeans and beyond fentanyl. The focus this morning for this market is what's next for Nvidia.
Right, exactly, John. It really feels like there is a lot more on the table here because coming out of the trade talks in Malaysia over the weekend, our general understanding was the framework that was going to be in front of the two leaders to finalize really had to do with a pullback in the recent escalations. But now you have President Trump suggesting that he's going to bring up Nvidia's Blackwell chips with China in what would be a major win for the company as it's been trying to regain Chinese market access since 2022. I will point out that we heard from President Trump in recent months saying that he would consider allowing the company to sell a downgraded version of its Blackwell processor. So we'll see how this ultimately shakes out if a deal is made. But I have to quickly mention that this really reminded me of a letter that then Senator Marco Rubio sent to then Commerce Secretary Gina Raimondo in September of last year, where he called for the U.S. to presume a posture of what he called presumed deniability for export licenses that would send critical tech to China. He wanted the U.S. to not allow any sorts of these types of technology to ultimately go to Beijing. So while I may be in Korea, I'll give you the Washington angle here, which is that defense hawks might be waking up to a tricky position if they previously advocated for, John, any sort of national security concerns against such a sale like this.
Well, Tyler, are there any defense hawks when it comes to China hawks left in the Trump administration?
Well, we're going to have to see at this point, right? Because Marco Rubio was really considered to be one of the staunchest when it came to his position on China. He really took a bipartisan role when he was in the Senate, leading a lot of bipartisan legislation when it came to bolstering our own domestic chip supply chain. I will say I have my eye on members of Congress, including those that lead the China Select Committee, such as Congressman John Molinar. He just came out with a statement in the last week saying that he would be urging the Trump administration to have some caution when it comes to its dealings with China, particularly around advanced semiconductors. Of course, Congress could introduce some sort of legislation here if we did want to see a pullback, but it's hard to see how that would really get through, considering that, of course, Republicans hold both chambers. Even if there's some criticism here, it's hard to see that they would go against President Trump's policies.
Tyler, thank you. Tyler Kendall in South Korea, just ahead of that meeting between Xi Jinping and the President of the United States, Donald Trump. With us for more, Henrietta Treyz of Veda Partners. Henrietta, we should highlight no decision has been made as far as we know on this issue, but certainly it's a conversation, so let's have it. Henrietta, how much influence does the Nvidia boss have over American policy?
Plainly quite a lot. I'm actually just recalling who was in the room with the president when he was being feted at Windsor Castle. It wasn't the soybean farmers or the ranchers that you usually would equate with the Republican Party. It was Meta. It was OpenAI. It was all of Silicon Valley. And this deal that they're telegraphing right now from Treasury Secretary Bessent and President Trump suggests that we might get 2 shipments of soy, which is less than 1% of what we sold to China in 2023, to actually exchange for tremendous amounts of sales of this incredible Blackwell chip from NVIDIA. So it's a real migration away from the traditional Republican base and into the Silicon Valley base for at least the president, definitely not the members of Congress in the House and the Senate, though.
Henrietta, that's where I wanted to pick up with you. Tyler really set the stage. How much friction does this potentially mean between the Trump administration and traditional Republican hawks on China in Congress?
It's almost unfathomable. You have Marco Rubio, as you correctly point out, is a massive China hawk who has been for his entire time on Capitol Hill in the United States Senate as a presidential candidate himself, and now as the in the Trump cabinet, being clearly usurped or superseded by J.D. Vance, who is widely viewed in conversations I have with Republican staff as the next in line to the Trump lineage when it comes to who would be the Republican candidate in 2028. It's definitely Vance by a country mile. I think almost 50 points in data and polling. So certainly a major push away from the China hawk stance and into whatever Silicon Valley wants is where the administration is willing to go, even if it's at the expense of the cattle ranchers, for example, or the soybean farmers, which you see now telegraphed live and in prime time in Twitter wars and social media posts and things like that.
Can the president and this administration say they're de-risking from China, but even having the conversation about Blackwell with China?
You know, it's interesting. We really want to see the details here, because are these licenses that they're going to threaten again in a couple of months? Do we even mean it when we put software on the table in the first place just a couple of weeks ago? How far is this administration really willing to go in verbiage versus in hard and fast reality of what's going to get sold and started to be exported? Those licenses, I think, are going to be a constant push and pull. We shouldn't expect China to ink any kind of comprehensive deal right now. They're going to want to drag this into 2026, 2027. That is their MO. That is certainly what we saw in the first Trump term and even in Biden's intervening term. So I wouldn't expect a finalized deal, which means risk around this is all sort of going to continue along with us. But certainly moves on NVIDIA speaks to what the Chinese are prioritizing and what Trump is willing to give away.
Even having this dialogue between Washington and Beijing on Blackwell, does it show that China actually didn't overplay their hand when it comes to the rare earths?
No, definitely not. And not that I can tell. I mean, they still have a pretty massive war chest that they can either use with us or not on soy. And that is a huge pressure point for the president of the United States, in theory, certainly from House and Senate Republican lawmakers. But when China threatens rare earths and they send envoys out to the EU, which they did earlier this week, and then speaks to the president and gets him to the negotiating table to the point where he's even taking off fentanyl tariffs for a deal that they reached over the summer, now it's permissible to take those fentanyl tariffs off, and we don't know what the deals are on rare earths. So I don't think they overplayed their hand at all. I think they played all the hands that they had, and they're in a very winning position right now.
Annmarie, I'm pleased you brought this up because I think it's so important to what's developing in Asia this morning and possibly tomorrow as well. It risks being a strategic misstep because it risks bringing the Europeans closer to the United States on a policy of maybe cutting China off and de-risking. That was the ultimate risk here. But there's little evidence that it's influenced the negotiations in an adverse way for the Chinese, at least, based on the developments we've seen in the last 24 hours. Now, things can change in the next 24 hours. I don't know what's going to happen with these high-end chips. But the fact they're even up for discussion at this meeting, I think speaks to the fact that China's got some leverage here.
Absolutely. The Blackwells were never supposed to be on the table. At least that was the signaling from the administration from months. But there has been this debate behind closed doors. And Jensen Huang, obviously one of those individuals that's been frequently conversing with the president. There's been this debate on, do we want to be traditional hawks or do we want to get China addicted to our technology? If you want to get them addicted to our technology and not make their own, I guess maybe they could steal it, then sell them the high-end chips.
Henrietta, does it undermine the national security argument if the national security assessment changes every 6 months?
Yeah, and, honestly, Annmarie just makes the best point. The Section 301 investigation that launched this entire war in 2018 in the first place was over intellectual property theft, forced tech transfer, exactly the things that had nothing to do with the Phase 1 trade deal, which was exclusively about soybeans, that even that piece wasn't acknowledged, and we never started a Phase 2 negotiation. So to think that now here we are dealing with the potential for forced tech transfer, intellectual property theft, state subsidization, continued non-market factors, restricting rare earths, and holding the U.S. hostage with those things in major industries from defense to autos, it really speaks to the advantage that China has going into this and the way they prepared for Trump's second term.
Henrietta, thank you. Appreciate it. Henrietta Treyz there of Veda Partners with the latest down in Washington, D.C. It's one perspective. We'll see what happens tomorrow.
I mean, I remember in 2016 when the president famously talked about the fact that China was conducting the greatest theft in the history of the world when it comes to intellectual property with the United States. This would be a big change of direction, change of course for this administration, and it will deeply impact the Republican Party and how they decide how they want to move towards the future in conducting policy with China.
For the market at least, financial markets like what they hear. Equity futures up by 0.3, adding to yesterday's record high. Coming up on the program, Tony Wang of T. Rowe Price as President Trump weighs Blackwell chip talks with China. Plus, Yohara has your morning movers. Shares of Bloom Energy soaring as third quarter earnings top estimates. Four-day rally on the S&P 500 heading into some serious event risk. The Federal Reserve later on this afternoon. Lots of earnings after the closing bell. And then a meeting between the President of the United States and the Chinese leader Xi Jinping. Equity futures up by 0.3 this morning on the Nasdaq, high by 0.5. In the bond market, fixed income, the Treasury market really well behaved between the last two Fed meetings back in September and the one that started yesterday. Yields this morning up by a single basis point, 350, basically where we were in the middle of September. 10s around 4%, basically where we were around the middle of September. Yields up a single basis point at 399. If you want a big move, it's been in gold. 3 days of gold trading lower. A 3-day losing streak, which amounted to a loss of more than 4% and a break briefly of 4K. Bouncing back this morning by 1.7%. Gold up by about $67 so far this morning. That's the cross-asset price stories so far this morning. Let's get you an update on some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with NVIDIA on the brink of becoming the first $5 trillion company if this level holds at the open. Shares are up 4%, boosted by a flurry of deals announced yesterday at its GTC conference, but also, and more importantly, President Donald Trump planning to use NVIDIA's most sophisticated chips as a card in his meeting with Chinese President Xi Jinping. So one to watch at the open and into tomorrow during that highly consequential meeting. Meanwhile, Bloom Energy shares also soaring in the pre-market, up more than 18% now after another strong quarter. Its fourth in a row of record sales as the company rides the AI power boom, locking in deals with the likes of Oracle and Brookfield Asset Management. That's made it one of the best performing stocks of 2025. Shares are up 380% year to date. And moving on to the online retailer Etsy, shares are now down more than nearly 10%. It has been very volatile this morning. It was up about 6.3% when it reported results and also reported an executive shakeup. It handily beat estimates on the top and bottom lines. But as I mentioned, it also announced its former CEO is stepping down after 8 years, paving the way for its chief growth officer to take the helm. But investors obviously questioning that move. John?
Thank you very much, Yahara. More from Yahara in just a moment. At risk of sounding about 40 years older than I actually am, I never go on Etsy. I don't even know what's on Etsy.
Well,
I don't even really know what Etsy does.
There's some cool stuff on there. I'm not a huge Etsy user, but my sister is, and she's actually gotten some interesting stuff. You can even get like marble countertops and sinks on Etsy.
People will do stuff like bespoke for you.
Yes.
Like artists and designers.
Very cool.
Things like that. Okay. All right.
But you're on Pinterest.
I eventually
so
got on
I'm
Pinterest.
actually shocked that
Pinterest,
you're not on Etsy.
Mood boards for interior design, things like that. Anyway, different story. Okay. On our radar this morning, Boeing delivering a beat on free cash flow. The company also adding 737 production is not yet at the new FAA-approved rate of 42 jets per month. Elsewhere, President Donald Trump says he'll discuss NVIDIA's Blackwell AI processors with the Chinese leader tomorrow. Investors hoping the chipmaker will gain more access to the company's largest market for its products. And finally, China buying its first cargoes of U.S. soybeans this season as the two nations work to hammer out a trade deal. President Trump and the Chinese leader meeting tomorrow on the sidelines of the APEC summit in South Korea.
So last year, China bought $12 billion worth of U.S. soybeans. This year, it's been zero. So for the administration, especially when you're talking about farmers in the United States, that right now the U.S. government is shut. We haven't even talked about it 90 minutes into the show for 29 days. They can't get a bailout right now to these farmers. So this is music to the ears of the administration. But the issue at hand is, and you just did these stories back to back, Jonathan, what do we have? We're giving away our highest technology, potentially with the president saying they will discuss Blackwell, the super duper chip, for what? Soybean purchases? That seems like an imbalance and an unfair arrangement.
What exactly is off the table tomorrow? Is Taiwan on the table tomorrow? That's got to be a question that we need to ask the administration.
The president has insinuated that nothing is changing with Taiwan, and Secretary Rubio a few days ago made it very clear to reporters when he was traveling to meet the president in Asia that anyone who thinks that there's going to be some sort of move on Taiwan in exchange for trade is completely wrong. That is not on the table and under for discussion right now.
NVIDIA up in the pre-market, giving a lift to this equity market more broadly on the S&P 500 higher by 0.3%. Let's stick with the US and China. Tech stocks pushing equities higher as President Trump opens the door to Blackwell chip discussions with China's Xi Jinping. The news comes as Max 7 earnings kick off with Meta, Microsoft and Alphabet all reporting after the closing bell. Tony Wang of T. Rowe Price joins us now for more. Tony, welcome to the program. It's quite a statement from the President of the United States. How much of a game changer would that be if NVIDIA had that kind of access to sell into China?
Yeah, well, I think that's important from a scale and R&D manufacturing standpoint. To have China as a big growth market, I mean, they are huge consumers of chips. And I think when you take a step back, NVIDIA is becoming the backbone for, I think, America's AI century. And so I think it's exciting to see the announcement from GTC, very eventful, what's going on this week. And I think at the end of the day, you want all countries to be developing on the U.S. tech stack. And at the end of the day, it is a full stack. It's not just a chip. And so whenever there's an innovation that goes on, in DeepSeek, there's a recent one, DeepSeek OCR, it's on NVIDIA and it creates stickiness because you essentially have another kernel in that like CUDA library.
If the administration, Tony, is moving towards this idea of let's get China addicted to our technology versus the China hawks who say let's make sure China gets zero access to our technology, who else can benefit from this?
Yeah, well, I think that at the end of the day, like, you're going to see a lot of China homegrown solutions, and they're not going to be up to par over the next few years. But over the long term, I think you're going to see more of a bifurcation of the computing ecosystems. And I think, maybe like the U.S. pulls ahead in the near term, but over the long term, I'm not sure if that's the best thing for, kind of global relations and collaboration.
How much money do you think NVIDIA could be making alone in China if Blackwell is going to be allowed to have that sort of access?
Well, I think that, overall China is about, 25 to 30% of GDP. And when you think about that in rough numbers, like historically, China has been in that kind of area code. And so, I think it's definitely like a massive market and important for U.S. technology companies to be able to sell into that market and create this flywheel of scale R&D and revenue for innovation.
We've got to wait a month to get earnings from NVIDIA. Don't have to wait too long to get earnings from the others. Tony, let's talk about it. Microsoft, Meta, Alphabet after the close. Meta keeps coming up in our conversations, Tony, as maybe a risk for this market. How are you thinking about Meta later, and what are the risks around that story?
Well, I think Meta is probably uniquely positioned in that they have a ton of leverage in terms of attention and all their digital properties and being able to move fast and integrate AI. And if you look at advertising and return on advertising, that is like actually a really key area that has seen a lot of ROI. So I think that at the same time, they're spending a lot. So we're seeing a lot of that depreciation and OPEX come through the P&L. And so I think it kind of acts like additional amplifier. So if they beat, the stock can move a lot more. And if they miss expectations, there could be a lot more downside because of, then people are saying like, oh, like you're investing a lot, but you're not getting the return. So I think it just adds more leverage to whatever earnings is going to come.
Tony, just to extend that thought, how reflexive is this moment? If we do get that kind of miss and they start to be punished for spend, do they pull back even more on spend? Is that what we're getting at here?
I think that I think AI is such a big opportunity and the potential is so vast. In addition, if you have the scale and the customer base, like the investment can be amortized over a lot of years. And so there probably is just more risk to underinvesting. And I don't think in this kind of market where there is like that huge potential that you get stronger by shrinking necessarily in your investments. So my sense is that, even if this quarter is a blip, like that the long term still is intact for the returns on AI.
Tony, though, do you think the market is potentially, if there is a blip, something, and Jonathan talked about this earlier in the week, something like their fourth quarter for 2022?
Yeah, well, I think that what I'm looking for is, agentic AI, robotics, like all these new drivers. And you saw Sora release their video product, 6G with Nokia at GTC. And so, I think that what matters most is that the token usage for AI continues to go up, and then the cost of delivering the tokens goes down with better algorithms, with a new generation of computing platforms, and that results in I think more sustainable investment. And so to me, it's like watching at the end demand. I think there's a lot of PowerPoints and estimates and with point in time, what is 2027, 2028 going to look like? But I think what matters is like the momentum of the progress and that expectations continue to get revised up.
Tony, if I ask this question, I just know people at home are going to scream bubble, bubble. These are only the questions that get asked in a bubble. But how easy is the next trillion of market cap in this market compared to the first trillion? Tony, I just remember sitting in front of a camera, waiting for that first headline of the first $1 trillion company in the United States of America. And we've just gone from 1 to 5. And it feels like we've done that, Tony, in a heartbeat, in a blink of an eye.
Yeah, it's a great question. I think there might be a bubble in how many people are talking about a bubble, actually. And so it's an interesting framing right now. And I get this asked a lot by clients and internally. In terms of market cap, I started covering NVIDIA for our firm 8 years ago when NVIDIA was about a $150 billion, $200 billion market cap. And at that time, everyone thought that was like really big. How can NVIDIA grow, beyond a pretty sizable market cap? And I think that you just seen that the market, the TAM continues to expand. And, in a way, it grows even more with better product introduction. And so I think that, the market continues to underestimate how big AI can be. And so I think that's what's exciting. And I think that, the last $1 trillion of market cap actually came a lot faster than the first trillion, right? So I think part of it is, the compounding nature of just the innovation that's been going on.
Tony, I think there's something, though, in the worries that some people have. When you say things like, right now, the biggest risk is underinvesting, not overinvesting, and we've heard the same sentiment from Alphabet last summer. The CEO said almost precisely exactly the same thing on the earnings call. Tony, that feels like a commitment to a misallocation of resources, to overcapacity. Is that not a fair assessment of things?
Yeah, well, I think that a lot of people compare it with like the fiber build out, right, in 2000. I think there's a few differences. Like one, the utilization on fiber was roughly 20%, throughout that period of build. And right now the utilization, I mean, we're sold out of cloud capacity. And so I think one is that the apps are real, they're here. There's a lot of, I think, high utilization. And then also like the cost of compute here is actually increasing, so it's an inflating cost curve. So it actually rationalizes supply in a pretty reasonable way, but doesn't mean that we're not going to have an oversupply, that's not cyclical. But I do think that it is in a way that you're seeing like more unlocking of new demands. And when you look at the vastness of the demand drivers, I mean, they can be really pretty impressive. I mean, on Instagram the other day, there's a robotics company that is going to try to sell me a humanoid robot.
I saw the same thing.
I mean, that's a brand new driver, right, that we weren't talking about a year ago.
Tony, I'm not a market leader with those things. I'll let someone else do that first. Tony Wang of T. Rowe Price. Tony, thank you. Have you seen that humanoid on social media?
No.
Okay, check it out. Creepy. I understand the commitment to overinvesting because as far as they're concerned, this is existential risk. And the risk for them of missing out is greater than the risk of ending up with a massive misallocation of resources. But given the commitment to that, that's why people are a little bit nervous on the margin about how their story is going to play out.
And that's why you have reporters on Air Force One even asking the president if he's concerned about AI bubble. And he says, no, everyone is just trying to get their hands on it. He did point, though, one of the issues it's going to have is the electricity needed to run all of these data centers that the AI cap X story is bringing on.
Nasdaq futures this morning up by 0.5 on the S&P, up by 0.3 with an update on stories worldwide with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. President Donald Trump is in South Korea ahead of tomorrow's big meeting with Chinese President Xi Jinping. Speaking to reporters aboard Air Force One on his way to Korea, Trump said he expects to lower tariffs on Chinese goods over the fentanyl crisis, and that he will speak with Xi about giving China access to NVIDIA's Blackwell AI chip. Meanwhile, Apple is making major changes to its MacBook Air, iPad Mini, and iPad Air lines. Sources telling us here at Bloomberg it's testing new versions of the products with OLED screens, replacing its current LCD screens. The new models could come as early as next year, but plans are not final and could still change or get postponed. And the World Series is all tied up at 2 games apiece. Following Monday's 18-inning thriller, the Toronto Blue Jays bounced back with a decisive 6-2 win over the Dodgers in Game 4. Vladimir Guerrero Jr. led the charge, blasting a 2-run homer off starting pitcher Shohei Ohtani in the 3rd inning to help even the series. Game 5 is later tonight in Los Angeles. That's your Bloomberg Brief. John?
Very cool. Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, traders expecting a rate cut.
The Fed, will cut rates, and then we'll see. I know the consensus is you'll get another cut before the end of the year. The Fed always is an observer of what's going on in the real-time economy. The real-time economy can shift very quickly.
Up next, Blake Gwinn of RBC Capital Markets from New York City. You're watching Bloomberg TV. Special coverage of the Federal Reserve decision later on this afternoon. 1:30 Eastern Time, our coverage begins on Bloomberg TV and on Bloomberg Radio. We'll kick things off with Bob Michael. We'll hear from the former Fed Vice Chair Richard Clouder, Kathy Jones and Charles Schwab on the bond market, Torsten Slock of Apollo with the post-game coverage. Of course, the decision at 2 p.m. Eastern Time, the news conference at 2:30. Equity futures into that, positive by 0.3% on the S&P 500, a 4-day winning run into Wednesday. All-time highs and more record highs on the cards later on this morning at the opening bell. Equity futures up by 0.3 on the Nasdaq, up by close to 0.5. Under surveillance this morning, traders expecting a rate cut.
The Fed, will cut rates, and then we'll see. I know the consensus is you'll get another cut before the end of the year, but the policy rate has been higher. I think they're looking to move more toward neutral, and so we'll take a step in that direction. But I think the Fed always is an observer of what's going on in the real-time economy. The real-time economy can shift very quickly. At the moment, I would say the U.S. economy is in quite good shape, but I wouldn't jump forward.
So here's the latest this morning. Investors pricing in a quarter-point cut from the FOMC at 2 p.m. Eastern Time. Blake Gwinn of RBC Capital Markets writing the following. The economic backdrop continues to provide the FOMC with a window for delivering interest rate cuts. They're going to take it. Blake joins us now for more. Blake, good morning. Good to see you.
Good to see you.
The last time the Fed made a decision, you made a very important point, that the outlook hadn't changed so much, but the risks around the outlook have. What are the risks around the outlook now, and have they developed since the Fed last met?
Exactly the same as they were in September. Part of that is obviously because we're not getting the official sector data. But even if you look at what we have received, so the CPI that they decided to release, the private sector data, and I would say also the beige book that they had. The beige book really kind of characterized things as largely in the same place as they were in September. So I don't think the Fed's really gotten any information that's really going to change their outlook. I would expect Powell, any comments that he's going to make on the macroeconomic outlook, this afternoon are probably going to be largely what he made in September.
So cuts 25. Can he guide to December?
I don't think he does. And I think, if anything, the markets are going to be much more focused around some of the meta conversation about what are they looking at. If this continues for another 2 months, if this continues into the December meeting, I think what I'm most interested in are any questions around what data are you putting most importance on?
What are the metrics?
Yeah, we know their reaction function to some degree around the official sector data, and we know how they're thinking about, an unemployment rate or about NFP levels, but we don't really know how they're using the data that they do have right now. And I think it'll be interesting to hear how they're kind of thinking about things, what metrics they're looking at, and what's going to make that decision around December.
Well, isn't that a risk in itself, the fact that they don't have data and we have this data desert? How much can they lean on September going forward if you're a data-dependent Fed?
Well, it does make things interesting, and I'm a little bit torn about what the base case into December is if we don't get data. Because on the one hand, you kind of have this do no harm type of idea where I could see the hawks on the committee saying, hey, look, we cut the last 2 meetings. We did get inflation data, which shows the services side of things a little more pressure than we'd like to see. Maybe we should just play it safe and not do anything. But you could also make the case on the other side, which is that those labor market risks are still apparent. ADP is still showing this low hiring, slow firing mode. So I'm not even really sure what the base case is into December if we have no data, no new government data coming out.
Is it possible that dissent could cut both ways at this meeting?
Absolutely. I think that was true last meeting as well. I was actually curious to see if we got 2 dissents at the last meeting, because I think you have some members like Hammack, Schmid, who have come out and not everybody can dissent. So we're just talking about the voting members.
No,
but Schmid could certainly dissent. And we have heard those members kind of take a harder stance on the inflation side and said, unlike Waller and I would say now Powell at this point, not so quick to kind of dismiss some of the inflation pressure we're seeing. They're not ready to write it off as only a tariff problem, something that's going to dissipate as that one-time price shock kind of moves through the system.
I believe that Hammack can dissent next year. And the mix next year maybe gets a little bit more interesting. So let's talk about that. We're going to get a change of leadership in May. How easy is it just to lead the committee and say, you know what, we're going in this direction, given the mix we might see in 26?
It really depends on the personnel. And I think this is, one conversation I've had a lot with clients who have kind of said, well, we're going to get a very dovish Fed chair from Trump, and they're going to come in and, they're going to slash rates 100 basis points
and
when
do what they want.
Fed chair. Yeah, that's just not how things work. And I think we're kind of a product of this last 40 years where we've had very strong Fed chairs who I think have a very good give and take with the rest of the committee. They're respected by the committee. They're taking information from the committee, incorporating that into their own views. And so, yeah, the chair has spoken for the direction of policy. If we get somebody who is very outside of that consensus, who's to say the chair isn't a dissent at every meeting? I mean, it could be very interesting, but what if we have Miran and the new chair dissenting at every meeting?
For the record, I saw this in the UK more than 10 years ago. I remember when Governor King wanted another round of QE and kept dissenting and voting for it. So we've seen that happen in the UK. Are you suggesting we might see a UK-type scenario in the United States?
It's just not what we're used to in the United States.
We're used to the Greenspans of this world.
Yeah, and I think if we're thinking about how dovish the Fed is next year, it's not just about how dovish the new chair is, it's also about how effective they're going to be at delivering on that dovishness.
Well, who's the most dovish then of this list? Would you say that's Kevin Hassett?
I would say you'd look at somebody who is closer to the administration, so a Hassett or a Warsh, but somebody...
He's a hawk.
He was. Let's be very clear. He was. Not anymore. So I think you'd look at somebody who was much closer to the administration is probably arguing for the most cuts, but also in the same respect, also maybe not being able to sway the rest of the committee.
But it'll be transparent. If it is someone like Kevin Hassett, it'll be transparent. It's not like Arthur Burns and Nixon, where the market didn't really understand how close that relationship is. It'll be very transparent to the market that, okay, this policy could be heavily influenced by Trump himself.
Well, I think it will be clear that person could be heavily influenced, but then that's where the question of how much control over the rest of the committee they have comes in, because that's where I think somebody like a Waller, who may not be as close to the administration, who may kind of go off on their own, and he's leaning dovish now, but maybe that framework changes. He's going to be much more effective, and I think has that respect. He has a very understandable framework for where that dovishness is coming from, and so may actually deliver more cuts than somebody who you would expect to be a more dovish member.
Blake, this was great. It's good to see you. Blake Gwinn there of RBC Capital Markets. That final point is a point shared by Neil Dutter of Renmac. I've heard that point made a few times. It's an important one. Who can really operate? Who can really maintain that institutional credibility and ultimately deliver what the president wants?
And we've already seen him successful. Remember Jay Powell at Jackson Hole? The speech literally could have been written by Governor Christopher Waller.
It sounded like a speech. You've been consistent about this. The longer it goes on, the more likely it is that it's Secretary Bessie.
What did we hear from the president yesterday? He then took a straw poll, basically impromptu, from the executives sitting at that business meeting saying, what do you think? It should be Besant, right? He doesn't want to do it. Come on. Basically trying to get the whole business community to rally behind his Treasury Secretary to move over to the Fed.
Equities this morning, record highs on the S&P. Up next, Alicia Levine of BNY Wealth, Shweta Khajuria of Wolfe Research, David Mericle of Goldman Sachs, plus Jay Goldberg of Seaport from New York City. The third hour of Bloomberg Surveillance. Up next.
The Fed would be well served to be very cautious in this environment.
They're in almost an impossible position.
The vacuum of data is starting to cause some concerns.
Data or no data, you still have to make policy.
They have to be pretty careful about how much they signal more cuts going forward.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
The opening bell 90 minutes away, live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. Adding some weight to the recent rally. All-time highs on the S&P 500, up another 0.25% on the Nasdaq, up by 0.4%. 4 days of gains. We're looking for day 5 in the bond market. 2s, 10s and 30s heading into that Federal Reserve interest rate decision. 10s just short of 4% at 3.99, up 2 basis points today. 2s around 3.50. It's not just the Fed meeting. We get some earnings. We get trillions upon trillions of dollars of market cap reporting later. Meta, Google, Microsoft, and then it's the big one for trade talks, the president and Xi Jinping.
So I thought the trade talks, we were going in pretty much knowing exactly what we were going to get. Over the weekend, you've heard the Treasury Secretary, Ambassador Greer, even the Chinese talk about some of the consensus and the framework they've worked around. Then the president, on his way to South Korea, sprinkles a little bit of this on top of the market, talking about the fact that Blackwell, the U.S.'s most advanced, highest technology chip, potentially is going to be on the table for discussion to enter back into China. To enter into China. This would be pretty much taking this relationship to a very different direction than we thought when it comes to de-risking. As Trump said himself, this is the super duper chip.
It's a significant story in this market. In the pre-market, Nvidia higher through most of the session by around 3%, supporting equities higher by 0.25%. Big hour coming up. We'll catch up with Alicia Levine of BNY Wealth. The stocks trade near record highs. David Mericle of Goldman Sachs with a key Fed rate decision on deck. And Jay Goldberg of Seaport, as he remains the only Wall Street analyst with a sell rating on Nvidia. We begin this hour with stocks edging higher as investors gear up for a crucial day full of big tech earnings. Alicia Levine of BNY Wealth writes the following. The extent of the next leg of the rally depends on earnings season to deliver this week, particularly in the AI trade. Alicia joins us now for more. Alicia, good morning.
Good morning.
Don't lose the main point. Your words, the direction of travel is up. Is that still true?
That is still true. You could see it's true, right? So it's now taken on a life of its own as the Fed cuts into increased earnings estimates and an economy that is not just stabilizing, but growth estimates are ticking up higher for next year. And you're in this you're in a liquid situation. And so the direction of travel is up. It's an everything rally here.
And China and the US getting out of the way as well.
And China and the US.
Your reaction to that development overnight?
Oh, it's what we expected. I think there was no way that this particular administration was going to leave Washington without providing something that was more positive than the fears from 3 weeks ago. And then just to point out that on the previous conversation, Jensen Huang has been reminding Wall Street that the NVIDIA numbers, contain no revenues from China. So, it was a setup for something actually to be announced here. There was no way the administration was going to go and not produce some positive news.
But they already had positive news. China was going to defer the rare earth export controls for a year. They were going to buy substantial, in the Treasury Secretary's words, purchases of soybeans. The fact that the president is saying they're even going to be willing to have this discussion on Blackwell, that is incredibly bullish.
That's very bullish. It's also a bit of a head fake. In the sense that we expected something very different. I think in the end, the question really is, do you want your competitor to have access to your technology and be dependent on it, or create the need which creates then an internal industry for it and developing one's own? And I think that's a real debate. It's a real debate.
And it looks like at this moment, potentially they're leaning into this idea that they want China
to have dependency,
to get hooked on that technology.
Right, because otherwise you create the conditions for doing it internally.
So Tech Mag 7, is it even about earnings or is it more about policy right now?
I think you can't divorce it right now because the policy is the earnings, particularly for some of the companies. Look, right now it's the AI trade. I can't tell you where the market's going here, only because we know it's going up. Whether the year ends, our official target on the S&P for this year is 6,700. So the market has far outpaced that for now and is likely to end higher. That's what markets do. They overshoot on the upside, they overshoot on the downside, and you get some sort of average in between. So, for investors, yes, this year ends likely higher. Is this the Santa Claus rally? Maybe. But we're getting conditions quite well. I think the earnings today and tomorrow really will then tell you the extent of the next leg of the rally here, because it's very important. The earnings have to deliver, and the forward guidance, and you have to have guidance.
Particularly when we don't have any economic data. So there's additional focus on the earnings. But you know what? I've said this a few times, Alicia. I wonder if you agree. The payrolls data hasn't been very useful to this market anyway, because at the start of the year, if I gave you all straight up and just said, these are the job numbers for 2025, you would have been hopelessly bearish on this market.
Hopelessly bearish. And let's just point out that the jobs numbers for the last few years have all been revised downward each year by 1 million jobs. So the data weren't that good to begin with. Right. So, the data were the data. The market traded off of it, but ultimately it was all revised downward. So in some ways, looking at the micro, hearing what companies are saying, what are your cost inputs? Are you passing it on to the consumer? What does the external environment look like? That is almost better than what we've got right now.
So let's talk about that divergence. I know you and the team are discussing it too, between the labour market and between earnings. Is that something that just sticks, that doesn't have to give, or does it have to give? Do we have to reconcile our differences over the next year?
So I think it doesn't have to give in the next year. I think it's a long-term issue. Like, can you have growth without job creation? That's the question. And the answer so far looks like yes. That's a bigger question than are new jobs created quickly or slowly? And so you're in something of a shifting situation where it looks like you are getting more productivity in the economy. Corporates are getting more productive, but at the same time, jobs need to be created for this new world that we're going to.
Could you have growth and actually job layoffs because that growth is coming from AI that may end up meaning you don't need as many jobs?
It's a tricky question because, you know, the top 10% of the income scale owns about 60% of the assets, and the assets, as we know, have been moving higher. So I do think that if there are layoffs and no job creation, ultimately the lower end of the consumer will start to overwhelm the cushion that we've had in markets with consumer net worth moving so much higher because of house prices and financial assets. So you're in an equilibrium here. It's certainly not stable. It's not stable to not have job creation and prosperity at the top. That's not stable.
Can we finish on the narrow breadth in the equity market?
Yes.
Had tons of messages about it. We've been talking about it over the last 2 hours as well. On the S&P yesterday, 398 decliners, 104 advancing in an up market. Your takeaway? These are the kind of things we don't typically see, maybe have never seen over the past few decades.
So it's not that healthy. Let's just be clear. Earlier in the autumn, we did see a further broadening of the market. I think this is just the moment at the time that the hints about China might be coming through for the AI trade. And so I think in some ways the last week or so is really just skewed to that. But earnings are coming in better. And in fact, the 493 are contributing to earnings in a higher way than they have in other quarters. So there is some catch up here between what the Mag 7 is producing in earnings and what the other 493 are. So the earnings are there. It is not so skewed as it was last year, for instance.
So if you wanted to
it's a better year for that.
To allocate to equities this morning and going through the rest of the next 6 months or so, what's the optimal way of doing that for you?
So we are overweight the U.S. We remain overweight the U.S. We do like going down the cap scale here because we do think that the one big beautiful bill actually is going to be very beneficial for industrials, which are really located in mid-cap here. So that's clearly the beneficiaries of some of the fiscal policy. But because the dollar is a little bit weaker, we do like emerging markets as well. I'd say emerging markets over developed international right now looks a little bit more interesting. Developed international really being pushed by Japan here. The growth in Europe is not that exciting. And so so overweight the U.S. and you satellite emerging markets a little bit lower the cap scale. And you have to do international just because the dollar is a little bit weaker.
And we've seen banks in Europe particularly absolutely rip in particular. The divergence, you want to talk about divergence, never mind the US, payrolls and earnings in America. Growth in Europe compared to what the banks have done this year. Growth in Europe from the ECB, this is their forecast for 2025, 1.2%. For next year, 1%. And the banks have absolutely ripped in that environment.
Financials have been killing it in the first quarter, second quarter, even the defense sector in Europe. That was a huge story about reindustrializing and making sure you have a strong defense in Europe. Other than that, where is the growth story in Europe? There really is no growth in the European Union until they do what Mario Draghi is trying to push them to do.
It's another classic example. I could give you the data and you still get the trade wrong. You know, you've got to think about that when the data does come back. Alicia, thank you. It's good to see you.
Great to see you.
As always, thank you. Alicia Levine there of BNY Wealth. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. Boeing stock is down about 0.8% after the company reported weaker than expected third quarter earnings. The plane maker said earnings were hit by a $4.9 billion accounting charge related to the delayed debut of its 777X jetliner. The new jet is now running 7 years behind schedule, a reminder of the long recovery ahead for the U.S. plane maker. Meanwhile, a handful of Republican senators joined with Democrats to pass a measure aimed at canceling tariffs on Brazil. The measure still must pass the House, and while President Trump would likely veto it, Brazil's President Luiz Inácio Lula da Silva said he was optimistic that a solution would be reached. Key Brazilian exports include coffee and meat. And President Donald Trump conceded he can't run for president again. Trump said, quote, "It's pretty clear the Constitution doesn't allow him to seek a third term." Trump has frequently floated the idea of another run, including showing off those Trump 2028 hats, despite the constitutional limit. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. Up next, the Morning Calls Plus, Shweta Khajuria of Wolfe Research, with what to expect from Meta earnings after the closing bell today. That's next from New York City this morning. Good morning.
Earnings are going to be good. The question is how much in the here and now is priced into stocks. It's basically going to be commentary rather than hard numbers. Commentary about the AI revolution. Our belief is that the positivity is going to continue.
That was Julian Emanuel of Evercore going into some important tech earnings after the closing bell. Meta, Microsoft and Alphabet today. Tomorrow afternoon, we'll hear from Amazon and Apple. Yesterday on the program, we had Wells Fargo talking about an everything rally. Email just now. This is not an everything rally. It's a few things rally. That's exactly what we saw in the equity market yesterday. On the S&P 500 this morning, up again by 0.3%, up on the NASDAQ by 0.5%. Thank you, NVIDIA, and maybe thank you to the president as well. That's the price action. Here are your morning calls with one stock in focus, NVIDIA. First up, D.A. Davidson raising its price target on the tech giant to 250, believing the market is discounting upside to data center revenue. Finally, Bank of America raising its target to 275, highlighting a very positive meeting with management after NVIDIA's GTC event. Plus, Melius raising its target to 300, calling it the clear AI leader. Let's stick with tech. It's a make or break day for the US equity market. Earnings from Microsoft, Alphabet, Meta, all reporting earnings after the closing bell. Bloomberg's Ed Ludlow joins us now for more. Ed, before we get to those names, you spoke to Jensen. We need to talk about NVIDIA. What a change we might see in policy from the president. Just raising the question, no decision yet, but feels like that's the direction of travel, Ed.
Yeah, it does. I mean, to be very clear, NVIDIA's official position is they have not asked the United States officially for permission or a license to export Blackwell to China. And on those analyst calls that you were just going through, what is so interesting is that in a completely informal way, Jensen Huang had a slide behind him on stage that said over the next 5 fiscal quarters, they'll do $500 billion of revenue just on their 2 generations of data center chip. And that $500 billion figure strips out China completely. So their base case is still 0 revenues from China. I would say what I'm hearing from sources is there isn't actually certainty around a meeting between Jensen Huang and the president, but clearly the president of the United States is expecting one. And if the president of the United States says they're going to talk about Blackwell, I guess they're going to talk about Blackwell.
Well, he's saying that the president is saying he's going to talk about Blackwell with Xi Jinping. And then he said that Jensen Huang was in the Oval Office just 3 days ago. So, Ed, I don't really care who from NVIDIA is making asks to the United States. The fact of the matter is, It does sound like this administration is taking its cues on policy from the NVIDIA CEO. Would you not say that?
So what I would say is there's always been GTC conferences in DC. This moment was the first time that Jensen Huang has made a keynote at it. And when the date was announced all the way back at the beginning of the summer, there was an expectation that the president of the United States would be here for it. You know, at first we were saying that this week that we were inferring that this was something political in nature. It was planned that way. And, you know, Jensen spoke to the media for hours about what he expects the president to do, and that is do what's best for America. And, of course, to Jensen's mind, tying it to the market move of today, where NVIDIA potentially becomes the first $5 trillion market cap company, you know, to their mind, what's best for America is their ability to export chips to China, which once they had 80% of the market in.
Well, Ed, yesterday in your interview, I wrote this down. It's our national treasure. That's what Jensen was talking about to you in terms of these chips. Why would this administration think it's so good to give away our national treasure to China when the president ran in 2016 about the fact that China was raping the U.S. when it comes to intellectual property theft?
Yeah, what we don't know is the specification of a Blackwell architecture chip for China. Remember that the kind of consensus in the White House right now is that it is better to ship a deprecated chip, a depowered chip to China than none at all. because otherwise you leave a vacuum that Huawei can enter and then potentially export out of China to other markets. But what we're not saying, and we just don't know, is that the cutting or leading edge Blackwell chip is what's in discussion here. We just need more information about from NVIDIA about some kind of chip that they've designed with purpose for that market.
At that final point, I think is very important. Ed, thank you. Ed Ludlow there on NVIDIA after catching up with the NVIDIA boss, Jensen Huang, just yesterday. The optics of this and allowing China to save face, you brought up the comments from the Commerce Secretary, Howard Lutnick, which effectively embarrassed the Chinese, which is something that most people who have experience in these matters know that is something you don't do if you want to get the optimal deal. Basically telling the Chinese, we won't say the good stuff, this is just the crap, right?
Yep.
Now you're in a situation where you can basically say, we're going to say you some good stuff and publicly dress it up as something better than it actually is. And Ed's asking a question as to how this would be configured and whether the stuff they'd be selling into China would be precisely the same stuff that the US has got access to.
It's a great question. I want to know the answer to it. Is this the full Blackwell, high advanced technology the US has access to, or is it a chip that's watered down, basically? In essence, what Howard Lutnick came out and said in July, which was, we're not going to tell them our top tier or second tier or third tier. Maybe they'll get the fourth tier. Is that what this is, a fourth tier Blackwell chip?
With a more politically pleasing wrapper? Possibly. I don't know, because this is still a conversation and we'll see what happens tomorrow. All to play for. Let's turn back to tech earnings after the closing bell. Shweta Khajuria of Wolfe Research has an outperform on Meta with a price target of 900 heading into earnings, writing, we're constructive on Meta into third quarter results as we see a beat and raise on revenue with greater clarity on CapEx and OPEX. Shweta joins us now for more. Shweta, welcome. I know we don't have long with you, so I'll try and squeeze in a lot of questions if we can. Shweta, in your mind, of all the companies that you cover, is this the one that's under pressure?
Well, I think among the mega cap names, we put these into different buckets, I guess. Meta, Google, and Amazon slightly different than some of the large and mid cap names. But among the mega cap names, I think that Amazon actually is most under pressure because they do need to prove out on the cloud front and on AWS, and CEO Jassy needs to comment on perhaps their relationship with NVIDIA, with Anthropic, as well as capacity constraints easing. So perhaps if I were to rank order them, Amazon falls under greater pressure, then Meta, and then Google.
Let's talk about Meta then. Putting up big numbers, Shweta. What we saw with Microsoft is they're able to say, look, we're spending all this money, but look at this revenue growth. It's fantastic. Can Meta repeat that act after the closing bell?
We certainly think so. We think that for the third quarter, the street's looking for, call it 22% or so growth rate, and we are actually expecting at least 25 to 26% growth rate because of all the changes that Meta is making on its platform, both for the advertisers as well as on its core platform itself, that is driving relevance, that's penetrating more of the ad budgets. And then for the fourth quarter guide, we think that they'll guide to 22% growth rate at the high end of their guidance range. And if they do that, exit rate still calls for a 20% plus growth rate that implies perhaps durability of healthy growth in 2026.
Do you expect Meta to come out and give more guidance as well on all of the AI hires they're making and the advancement those individuals are making? Because they're spending tons of money on these people.
Oh, for sure. We don't expect an OPEX guide in terms of an official numbers guide this quarter for 2026, but we certainly expect CFO Susan Lee to comment on how they're thinking about, provide a little bit more color about how they're thinking about OPEX, and not only compensation, but there are a lot of other costs in addition to D&A, lease expenses, energy, as well as cloud computing, because they signed different contracts that will be accounted for in that OPEX number. So to the degree they can comment on how much OPEX can accelerate in 2026, that'll be incredibly helpful.
Shweta, when can they actually put numbers around it, though? And at some point, does the market get frustrated?
Well, they used to guide in the third quarter for the upcoming year. They did not do that last year, so the expectation is that they'll likely provide more color this quarter, and then in the fourth quarter earnings call, they'll provide a little bit more of a definitive guidance on OPEX for 2026 as they have a little bit more visibility.
Shweta, Annmarie was talking about what happened 3 years ago. 3 years ago in the third quarter to Meta, when everything kind of fell out of bed. And that was really the foundation for the year of efficiency. Can we take a huge step back? How much has this company changed since the third quarter of 22?
Oh, it is remarkable how much when a founder-led company for a company this scale can turn around with certain decisions. And at the time, it was, they called it a year of operational efficiency or year of efficiency. And in a couple of weeks, and they changed their outlook on expenses. This is and since then, it is completely different. Why? Because we have seen so many dramatic changes, not only on the expense side, but more importantly, on AI side, as well as on the core AI platform that is allowing Meta to grow pretty much faster than any other ad platform out there. It is best in class growth. And as long as they can show those types of growth rate significantly faster than the overall digital advertising market, investors will likely give them a little bit of a pass on all the spend.
Shweta, appreciate it. Looking forward to the numbers a little bit later. I know you've got to run. Thanks for being here. Shweta Khajuria there of Wolfe Research. Looking ahead to the earnings. Maybe Amazon's the more vulnerable one. Looking at the coverage over at Wolfe. Meta in focus. Mark Zuckerberg's ability to make that company super agile. 3 years ago, we renamed the company to Meta. The focus was on the metaverse, doubling down on all of that, market pushback. And all of a sudden, a few years later, heading into a different direction aggressively.
Absolutely, with AI. And they have been out front and center, which is why I'm so interested to know about behind the scenes, what is going on with these individuals they hired. They are signing $1 million contracts for the best in AI. And the problem is other companies cannot keep up. And that is why they are doubling down on this story. It's interesting, everyone we talk to, though, they says they have to keep the revenue spending going. They have to make sure that's where they are bringing in those advertisements. That's what's really keeping this story alive, at least chugging along until we can get some firm numbers on what's going on in AI.
That stock, 8-day winning run over the last 8 days. Meta higher by more than 5%, 5.53% to be precise, heading into the earnings print later on this afternoon. Coming up on the programme, we'll catch up with David Mericle of Goldman Sachs. Before we get those earnings from big tech, we've got a Federal Reserve interest rate decision. That interest rate decision drops at 2 p.m. Eastern Time. A news conference with Chairman Powell 30 minutes later. David Mericle of Goldman up next. Plus, Danny has some morning movers. Fiserv plunging after slashing its profit forecast. That name is down by 36%. The story's up next. The opening bound just around the corner, 60 minutes away. Equity futures up by 0.2% on the S&P 500, higher on the Nasdaq by 0.4%. Lots of tech earnings a little bit later. A serious amount of tech earnings later on today. We're going to hear from the likes of Meta, Alphabet, Microsoft, $9 trillion of market cap across just 3 names. Throw in Apple and Amazon, and we're talking about the quarter of the S&P 500 across 5 names. Switch up the board and get to the bond market. 2s, 10s, 30s, pretty stable and well behaved on the session. Likewise, since the Fed last met, 2s around 350. 10s around 4%. That decision later on this afternoon. As we count you down to the opening bell, let's get you some morning movers. Let's cross over to Danny for more. Hey, Danny.
Hey, John. One of the wild things with all of the big cap tech earnings in focus this morning, NVIDIA doesn't even have its earnings until November 19th, and it is the stock of the morning. That is because with a 3.4% gain, it will hit the $5 trillion market cap club, a club where it is the only member. The gain this time happening off the back of positive signals coming from President Trump ahead of his meeting with President Xi, a hope that better relations and lower tariffs will be the result. Trump also saying that Blackwell from NVIDIA will be discussed as part of the conversation. We do have some other earnings to get through, though. Verizon reporting this morning. They did report a loss in the quarter of 7,000 customers, but that's not what this market is concentrating on. Instead, it is a new CEO who's only been in the spot for a couple weeks. He laid out a very aggressive growth strategy. In fact, he straight up said this is not an incremental plan. So with that ramp up that they're expecting, shares are up of Verizon 4%. Now, the biggest loser by far for the S&P 500 pre-market is Fiserv. This is a fintech company. Shares are down 37%. This isn't a penny stock. This is a $68 billion company that cut its outlook for the entirety of the year. Some of its financial solutions products also lost on the quarter. They're completely changing up a lot of their C-suite, including co-presidents and CFO, so a shakeup there at a 37, just under % decline. It is the biggest daily decline, at least we're headed that, since the company went public in the late 80s, John.
1/3 of the market cap gone, just like that. Danny, thank you. Looking forward to the program. Danny Berger alongside Matt Miller in about 30 minutes' time. Bloomberg open interest going into the opening bow. The opening bow 60 minutes away. As we count you down to the Federal Reserve decision later on this afternoon, we are expecting another interest rate reduction down in Washington, D.C. Bloomberg's Mike McKee joins us now for more. Good morning, Mike.
Good morning, John. Well, the theme of the day, according to Wall Street analysts, is going to be risk management. The question is, which risk is being managed? If you look at the alternative data, it suggests that hiring is very weak. We got a couple of reports over the week that suggested that that's the case, but there's not much change in unemployment. Actual data suggest inflation is still rising, but nobody knows where the tariffs are going to end up. So what does the Fed say about the danger of each side of its mandate today? We are going to get a 25 basis point cut. We'll be down to 3.75 to 4% for the target range. 150 basis points worth of cuts so far since they started. We expect Stephen Myron will dissent again for 50 basis points on Donald Trump's orders. Might have a no-cut dissent, but that's considered unlikely. It's still something to watch for. The question is really for people on Wall Street, what are they going to do in December? And Jay Powell is probably going to do his best to keep his options open. We're pricing in a December rate cut, but people don't really want, people on the Fed don't really want the markets to do that yet because they have no data. So the balance sheet is the one remaining thing to deal with, and we are considered likely, according to analysts on Wall Street, to get an announcement today that they're either going to stop it immediately or they'll put a near-term date on it. They could have a dissent on that from Mickey Bowman, who's suggested she wants a much smaller balance sheet. They will probably say they're going to reinvest the money in T-bills first, then across the curve from the maturing securities. And for the time being, maintain at least the $35 billion market mortgage bond cap as they try to work down to treasuries only. But that's going to take some time. It'd be an interesting question if they did suggest they might sell some mortgages to get there faster.
Mike, it might actually be an interesting news conference given the lack of economic data. Blake Gwinn of RBC was with us earlier on this morning. Raised an interesting question, Mike. How much of the news conference will spend asking them what they're looking at right now, how they're making these decisions and how they'll make the next decision?
Well, I'm sure they're going to get that question. I'm sure Jay Powell is going to say the same as he always says. We're looking at everything we possibly can. One of the key things that a Fed official will tell you if you speak to them is that they are talking regularly with companies in their district, trying to get a read on what companies are doing, whether they're planning to expand, whether they're planning to cut back, are they going to let go of people? We've seen a lot of announcements of layoffs in the last week or so in earnings reports. The issue for the Fed is that companies don't know either because they don't know what Donald Trump is ultimately going to do. So they're all kind of flying blind at this point, and that makes decisions that much harder, which is, again, why Jay Powell probably doesn't want people to assume December's a done deal.
Mike, you're one of the best. Looking forward to your coverage later. Mike McKee helping us to lead our coverage of that Federal Reserve decision later on this afternoon. Our coverage on Bloomberg TV and radio starts at 1:30 Eastern Time. That decision, of course, 30 minutes later. News conference 30 minutes after that. A lot of questions about the lack of data and a government shutdown, which you mentioned once earlier and we've hardly talked about.
Yeah, 29 days, government shutdown. No one's blinking right now, so we're not going to get jobs reports. We're not going to get CPI, except for the only one we did get that showed a 3 handle, which makes you think that Washington at this moment is comfortable for that. What do they do at December with this in this data desert? But I think you've mentioned before, last year, wasn't it the University of Michigan survey that really spooked the Fed?
It was a few years ago, yeah.
And are they relying on things like that? Then
we got these leaks to the Wall Street Journal, and
it's concerning.
Yeah. I agree with that. That wasn't a good period for this Federal Reserve. Let's stick with the Fed. David Mericle of Goldman Sachs, for Goldman's Take, writes the following. The September dot plot showed a baseline of 3 cuts this year, and with the official data paused by the government shutdown, there is no reason to deviate from that plan. David joins us now for more. David, welcome to the programme, sir. Let's take that median dot. How deceiving, how misleading might that median dot be, given the division that's clear, apparent on the committee right now?
I think it's likely that Chair Powell is part of that majority. I think that that does represent the default plan. And I do think with no official labor market data coming out, the most natural thing to do is to continue on that path. Even by the time of the December meeting, while prediction markets imply the government will have reopened, there will be challenges for the October and November data. They might not have all of the data. We might worry a little bit about data quality. And of course, the labor market data will show the effects of the Doge layoffs as well. And so you take all of that together, and I think it's a pretty high bar for the labor market data to cause them to not deliver that December cut as well. So we're expecting one today, as everyone is, and we're expecting a cut in December as well.
David, how are you taking stock of what's happening in the labour market currently? Mike McKee was going through some of the announcements we've seen from corporate America, Amazon, Target. There's been others as well. How are you tracking things?
Sure. We use a few different labor market trackers where we try to aggregate many different alternative data series. One of those is trying to estimate job growth. Our impression is that job growth has picked up a little bit, albeit from very, very low levels over the course of the summer. ADP started releasing their weekly data the other day, and you saw basically the same pattern, a bit of improvement, but from a very low starting point over the summer. We also look at a couple of different private sector measures of job openings, which replace the missing JOLTS report. And our impression there is that job openings have continued to decline. And then we also have several different measures that get at the same thing as the unemployment rate. How tight is the labor market? How easy is it to find a worker? How easy is it to find a job? And there, too, the impression is that we've seen an ongoing deterioration since the August employment report, the last one that we have. So overall, I would say that the data are probably mixed to a little bit worse, certainly not a strong enough signal to deviate from the plan to deliver the series of cuts implied by the dots.
So, David, just to be clear, even if the government is shut down by the next time the Fed meets and we get no reports from the BLS, you think the Fed could be in a position to cut interest rates? Don't you think that's going to look a little political?
I think, the thought was that there's enough weakness in the labor market that was visible even by the time of the September meeting that they wanted to deliver a series of risk management or insurance cuts to push back against that. Historically, those have usually come in packages because I think no one would think that one 25 basis point cut in isolation would do enough to push up demand, push up labor demand, hopefully, and address those labor market concerns. I think, those concerns are still very much with us. In the absence of the data, you fall back a bit on the alternative data. But I think it would be very difficult for the alternative data to send such a convincing signal that they alone push the Fed off course. By the time of the December meeting, if the government has reopened, we certainly should have the September employment report because that one was ready to go. In general, we think that the payrolls numbers that are collected late should be less problematic because, of course, we get late payroll submissions all the time. And for most months, they don't look systematically different from the on-time submissions. But something like the household survey, where past experience suggests it is really important to collect those data in real time, or similarly, the CPI, where we should have been collecting those data in October and haven't been, and there just isn't a way to make up for that a month later. On those reports, while I assume something will come out, we do worry a little bit about data quality and about some missing data points. So I do think by the time of the December meeting, they'll still probably be a little bit reliant on some of these alternative indicators.
David, you've put out some research over the last year, tons of research on tariff pass-through. I remember a note that came from you guys maybe a month or two ago on taking stock of who was eating it at the moment, how the cost was being shared across America, the importer, basically the company, onto the end consumer. David, how are you taking stock of things now? And how do you and the team see things developing into year-end and into early 2026?
Sure. Only a little bit has changed since we last wrote our report, but we do now have September CPI data. We did think we saw some small effects in goods categories. So I would say that our estimate of the total tariff impact so far on core PCE prices or core CPI prices is about 0.5 percentage point. That's similar to what the St. Louis Fed's economists have recently found. It's similar to what some other alternative data providers have found, people who are tracking prices using methods other than the CPI and PCE. So I think that's the general sense. And I would view that as basically meaning that although we're still printing at 2.93% year on year, actually the underlying inflation trend looks quite a bit better than that to us, more like 2.4, 2.5%. Once you kind of account for those one-time price level increases from tariffs.
That's a better story to tell. David, thank you, sir. David Mericle there of Goldman Sachs on the outlook for the Federal Reserve, looking for an interest rate cut this afternoon, another one in December, and very few reasons to deviate from the dot plot produced the last time they met.
I just think it's going to maybe not even seem politically, but just how uncomfortable it is for the Fed, who says they're data dependent, to get up there maybe in December. I understand they can hang their hat on the recent data we just got in September, but in December, potentially still be in a government shutdown and say we're still cutting interest rates, and the last CPI print we had was CPI at 3%.
I'm right there with you. It's uncomfortable. You've got a 2% price target. You've not hit it for now for a number of years, and you've had this rolling aspirational view that in 3 years you'll get there. In 3 years, we'll get there.
Mohamed Al-Aaron has been talking about this for years, and he's nailed it. Also, Mike McKee talking about the fact that the Fed governors are now relying on executives in their district. Why didn't they rely on executives in their district when inflation was ticking up? When companies services saw that we were going to be adding to prices, they were just relying on the data and thinking this is just going to be one hit transitory because of the supply shocks of COVID. So I think actually this moment, it is important and prudent for the Federal Reserve to realize they really do need to do more than just the BLS data. They need to have a holistic approach of what is going on in the economy.
Chairman Powell's been very consistent on one thing. They've got a preference to supporting the labour market, which I think is what they're doing right now. You can debate as to whether that's the right thing to do or not, but ultimately that's where we are under the leadership of the Chairman of the Federal Reserve. Equity futures on the S&P 500 positive here by 0.2%. Let's get you an update on stories worldwide with your Bloomberg brief. Here's Yahara.
Hi, John. President Donald Trump is in South Korea ahead of tomorrow's big meeting with Chinese President Xi Jinping. Speaking to reporters aboard Air Force One on his way to Korea, Trump said he expects to lower tariffs on Chinese goods over the fentanyl crisis and that he will speak with Xi about giving China access to NVIDIA's Blackwell AI chips. Meanwhile, CVS Health shares are rising 3.7% after it raised its 2025 profit guidance for a third time in less than 6 months. It's a sign that it's set a new foundation a year into CEO David Joyner's tenure, even as the company struggles with underperforming business units. The company said improved operations in its insurance unit was primarily responsible for the strong performance. And Tuesday marked the first full paycheck that air traffic controllers have missed since the start of the shutdown, raising concerns about the already understaffed aviation safety system. Transportation Secretary Sean Duffy warned that without enough controllers, flight delays and cancellations will only grow. That's your Bloomberg brief. John?
Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, don't miss this. Jay Goldberg of Seaport. He remains the lone analyst on Wall Street with a sell rating on NVIDIA. Jay joins us next.
I think there might be a bubble in how many people are talking about a bubble. NVIDIA is becoming the backbone for, I think, America's AI century. AI is such a big opportunity and the potential is so vast. In addition, if you have the scale and the customer base, like the investment can be amortized over a lot of years. And so there probably is just more risk to underinvesting. The long term still is intact for the returns on AI.
That was Tony Wang of T. Rowe Price on a bubble in Bubble Talk. Equities up again today, record highs on the S&P, up by 0.2%, on the Nasdaq, up by a third as we count you down to the opening bell. Check it out, the week ahead. It starts later on this afternoon. A Federal Reserve interest rate decision at 2 p.m., 2:30. Chairman Powell's news conference after the close, earnings from Microsoft, Meta, Alphabet. On Thursday, the President of the United States and the Chinese leader meeting in South Korea, plus more tech earnings, Apple and Amazon. Let's stick with tech. NVIDIA on track to become the first $5 trillion company as President Donald Trump fuels hopes of Blackwell chip sales in China. Jay Goldberg of Seaport Global holds the sole sell rating on NVIDIA with a $100 price target, saying there's a lot more that can go wrong with NVIDIA than can go right. Jay joins us now for more. Jay, welcome back to the program, sir. 73 buys, 6 holds. Your sell. Jay, what can go wrong?
Well, I think there's a lot that can go wrong. There's just not as much that can go right as well, right? For NVIDIA is the most scrutinized company on the planet. Investors track it down to every detail. Everyone looks at all the supply chain data coming out of Asia. We know what their capacity is. They say they're sold out this year. They say they're probably going to be sold out next year. Once you're sold out, how do you go up from there, right? There's some talk that maybe they got some more capacity, but there's not a lot of upside, right? And that's part of the reason China is such a topic of a focus topic, is because that's sort of the one swing factor quarter to quarter, as opposed to you start to look through the downside risks here is AI is, I maintain it's a bubble. No offense to Tony, who was just on, but I think there's a lot of, there's only really 6 companies driving all this spend. And you sort of look through the chain of what's going on in the data center construction, electricity, supply chain, the increasingly labored financial engineering that's going into putting these deals together. And I just think there's a lot of things that could sort of throw a wrench in the works.
Jay, what if, though, the President of the United States does strike a deal on Blackwell chips? Would that change your mind about NVIDIA and the price target?
No, I think that's the big swing factor quarter to quarter. They wrote those chips off a few 2 quarters ago. What's going to happen with their China parts? I think we all anticipate there's going to be some resumption of sales into China. So I don't think yes, it is some upside, but I don't think it's a sort of, I don't think it changes the overall arc here.
So
China is 20% of sales, something like that. So
you have a sell on NVIDIA and you think we're in a bubble. If you think back to the .com era, NVIDIA equals who?
NVIDIA equals Amazon, right? Amazon went up a whole bunch and then it fell a whole bunch and then it came back. And I think that's what we're going to see here too. Right, I agree. AI has the potential to be immensely powerful, and NVIDIA is really well positioned for that. But I think that there are going to be growing pains. No technology this big has ever been adopted in a straight line. There are going to be hiccups. There are going to be pullbacks. I think it's just going to take us a few more years to figure out what AI is actually useful for, and what it's good at, and what are the underlying business models. And there are going to be some pretty serious swings in share prices between now and then.
If it's reminiscent of Amazon, then at what level would you want to get in? Because I imagine everyone listening to this thinks, oh, Amazon, I wish I had bought that sometime in the past.
Well, buying Amazon in 1999 and then holding it probably took another 10 years for it to get back to that price. So I think there is going to be disruption in the whole AI chain. Right. And so I know that any sort of quarter to quarter dips, people will just buy into weakness. But I do think there are sort of more fundamental issues here around the adoption of AI, how long it's going to take, and how some of these deals, how some of these big data center things that are baked into numbers, how do those actually get built? Right. What happens if one of these major AI labs can't build their data center in time? They can't get the electricity, or they can't get the funding right. I think that slows things down. I think that, and then I think there's risks in consumer adoption. We still don't have a really good consumer AI app. And I think at some point, all of this spend has to be justified. And the return on that investment is not entirely clear in a lot of these cases.
Jay, could you just spend some time on describing what that moment of realization would look like when the other 70 plus names get what you're looking for? What does that actually look like? Because your price target right now at 100. I just wonder what the rest of the market would look like if we came down from 200 to 100.
So I probably have to review my price target. I'll give you that. But I do, like I said, I think what happens is over the next year or so, gravity just reasserts itself, right? I'm increasingly concerned by some of the financing that's taking place in some of these neocloud deals, some of these data centers. I think that's sort of almost a house of cards. In some cases, there are good companies there too, but there are just so many of these companies chasing this build. But when you get down to root demand, it's all coming from the same 6 companies, right? And I think if you push those companies on what their business case for all this massive spending on NVIDIA parts is, it's challenging for them to come up with a clear, coherent business case for it, right? And in that kind of situation where they're sort of investing heavily, spending huge amounts of money based on some form of fear of somebody else getting to some unspecified destination first, that's a very heavily psychologically driven spending wave.
Yeah.
And that can just as easily that came on, it can also turn off quickly too. And so I think what we'll see, probably not in this earnings season, but somewhere in next year, we'll start to see some easing back, some lowering of CapEx, and that sort of causes everything to reset.
Jay, people will have sympathy with that view. It feels like, and these companies are telling you they're behaving like they're facing an existential risk, so they're willing to overinvest or risk that than risk underinvesting. Jay, but the market keeps going higher. And I wanted to finish on a more personal question, if I can. Jay, career risk and how you think about that when this market's still ripping and sell ratings on Wall Street is super rare. And I have tons of respect for you to come on and just offer your opinion, unvarnished, how you see things, regardless of what the market's doing. Jay, do you feel any of that career risk, being that sole sell rating on such a well-owned name?
No, I'll tell you, one of the most surprising things to me is when I came up with this rating in April. Right. What I told clients at the time is I'm not saying short NVIDIA. That's a little bit too much. But I was saying that it's going to underperform other stocks in the sector. Right. In my sector, especially. And I think that's borne out. If you look at what's happened with Astera Labs or with Credo or with even Broadcom, those have all outperformed NVIDIA over the last 6 months. And one of the most surprising things to me in all of this is how little pushback I've gotten from clients, from institutional investors, from the buy side, right? I thought I was going to have to fight them tooth and nail, but most of them sort of quietly agree with me, right? We'll disagree on timing. Some will say I'm a little early, a little late, but nobody's sort of pushing back on the core thesis. There's a lot of concerns about all this, but also the market just keeps going higher. And I can't fight the market. I can't forecast the market, but I can forecast my sector and see what's happening there.
We're seeing that again this morning. Jay, thank you for being so open and honest with us. Thank you, sir. Jay Goldberg there of Seaport. This market keeps going higher. Equities at all-time highs. Coming up at 1:30 Eastern time, we'll have full coverage of that Federal Reserve decision. Bob Michael of JP Morgan, the former Fed Vice Chair, Richard Clarida, Kathy Jones of Charles Schwab, Torsten Slok of Apollo. Big day coming up right here on Bloomberg TV and on Bloomberg Radio from New York City this morning. Good morning. This was Bloomberg Surveillance.